Let's see. There we go. We are live. Hey, everybody. Thanks for jumping into the stream. Let's go ahead and let some people know. How's everyone doing this morning?
Doing great. Do I sound okay, by the way? You
Sounds
coming
good.
through?
Yep. Looks like
Cool,
you're coming
cool.
through just fine. We'll give some people some time to jump in here.
And are you going to be sharing your screen as well?
Yeah. I'll give you guys a live look so that you're not delayed. Okay, there we go. We're gonna do it live. All right. Hey guys, what's up? What's up, everybody in chat? Andrew, thanks for joining.
What's going on, bro?
I've got about half of the analyst team here on the stream with me that are going to help me with some of this DD. We're covering currently we're covering BBIG. I know I got Prague up here at the moment. I'll cover Prague in just a minute. Sadly, there's not much updates on Prague. It's still in that zone of supply that you saw there just a minute ago. But at the moment, we're playing BBIG for a squeeze. And the market makers just don't want to let it happen for some reason. I think they took a short bet. So let's cover just a little bit of technical analysis here and go ahead and hide some of these EMAs, make this thing a little less messy. Okay. So we got some great big volume spikes here. This volume spike was actually identical to the down spike that we got here. We got hit by a little bit more on the price at that point, but let's go ahead and finish drawing these out. Yeah, that's actually pretty close. So we just bounced off of the M8, the moving average, the 200-day moving average. Ugh, God, I got to get back into practice doing these streams. It's been a while. So yeah, like I said, we're bouncing off of the 200-day moving average right now, following just above that trend line at the moment. And if I'm not mistaken, Akam, since you're here with us, you had covered that exact situation in your DD on BBIG not too long ago. Do you still have your chart handy? I'd love to show exactly what it was that what you had pointed out in your TA previously. Akam, are you with us?
Yeah, I'm sorry. My Discord shut down on me for a second. I apologize.
Oh, no worries, man. Yeah, if you have your BBIG Trading View chart handy, I'd like to share it with everybody who's watching with us. We're currently up to 85 viewers. Fantastic. Thanks everybody for joining in.
Yeah, let me open this back up. Sorry, everything's shut down on me. So let me open up TradingView back up.
No worries. I'll cover just a little bit more TA while we're at it here. So currently we're actually hovering above the gap that we had set right here. Oh, hovering just below it actually. So this is actually one of the bearish scenarios that we're seeing potentially play out. So this gap that we had here in post market trading um, back on between the 14th Friday and Tuesday the 18th. And this gap at the moment, we came down just a little bit, filled about halfway down the gap. But then now it seems like we're bouncing and we're hovering right around this resistance support line. Previously was support for us, but since we broke through, it may have now become resistance. We're waiting to see what that looks like. But if we see a bounce here, then it'll be confirmation of this level above the gap. If we continue to break down, then we may fill the gap and head back down to $4. But at the moment, this is so far just looking like healthy pullback. This, like, let's just be realistic here for a few seconds. BBIG has moved from $2.50 all the way up to $6 in just a matter of like 3 trading days. That's a lot, okay? Like that's back to back 25% gains. So let's imagine for a second that a 10% pullback is normal in the market, which it is. So I know that a lot of people have a little bit of uncertainty when they see these kinds of like rapid red candles that push the price down by 10, 20, 30, 40, 50 cents at a time. And although it's a 10% hit, which is significant on a regular day in the market, but after like 2 back-to-back days of gaining 25%, it's pretty normal. So we're still above the 200-day moving average, which is something Occam's here is going to talk about in just a minute. But this is a bullish sign. If we're not breaking down below the 200 moving average, then there's a good chance that we see a bounce here in the near term. And it looks like we're already returning to trend. The support trend line, if we go ahead and draw from about here, then it would appear that we have a expanding megaphone. And an expanding megaphone pattern is it's mainly treated as a range. It's a range control technical pattern. Some people interpret it as bearish because if you're at the top of the megaphone, then you expect it to meet resistance there and then break down towards the bottom of the megaphone. But currently we're at the bottom, so we expect it to hit the top. So really it's a range. What you're doing is playing the range here. What we're looking for ultimately is for BBIG to break through the top of the megaphone, which would be a bullish signal. If it breaks outside of the top range of the megaphone, then that actually would indicate a break of trend to the upside. It would be a very bullish pattern. And if we're going to set a level, my level would be at $5.50. This is where I have my alerts set at because $5.50 is a key line of resistance. We tapped off of it several times throughout the 18th. And then again, 1, 2, 3 times. And we almost touched it 4 times here this morning. We actually broke well above it and went to $6 in post-market trading on the 18th in the evening. But we don't want to put too much emphasis on post-market trading just because the volume is so low. It's very easy to move the price during those hours. So we try to temper our expectations. The next piece that I wanted to point out, if we go ahead and move this over to the daily chart, we continue to see the OBV rising and creating these plateaus. If you notice it with most of these legs, there's a little bit of a wave or at least a small downtrend. If BBIG is following its previous patterns, then what we expect is for there to be a good long series of green days in a row, followed by one pullback, just an ordinary day of pullback, and then a rip from there. It's pretty normal if a stock is going up 20-25% several days in a row for it to calm down for like a minute and then for it to continue on its trend. Joseph Burns says 1348 EMA is about to cross on the daily. Thanks for pointing that out. I currently have the 50, 100, and 150 EMA set up here. So let's see. $13.48. Oh yeah. And as a matter of fact, we crossed below the 100 EMA, crossed below the 50 EMA just before January 7th, it looks like. Oh, no, it was back here. I'm sorry. It was on the 31st of December. So when we hit this consolidation, it was kind of like a really tiny falling wedge here on the daily pattern. It looks like the 50 and 100 EMA, that's the extended moving average, crossed below. And now we're bending back around. So if the 50-day extended moving average crosses above the 100 extended moving average, that would be a bullish signal indicating long-term momentum heading to the upside.
Yeah, I'd like to just add in too on the daily on BBIG. You do have that gap that happened yesterday.
Yes, that's true. We did have a huge gap that let me go ahead and pull this up. Are you looking at this on the daily chart?
Yeah, so you have that gap, and so today's kind of bearish action, the selling pressure, to me, I think they were targeting that to get back down to that 200 MA on the daily, and also use that gap as kind of acceleration to do so. Because if you see the wick of the daily candle today, it lines up just perfectly with the top of the wick of the gap up candle from the 14th, which I know there's a little bit of that gap fill that didn't get filled because of the close of the candle, but they did align the wicks of the candles from the 14th to today on the daily.
Yeah, I see. So the wicks between these two, you see these for everybody watching this this big wedge breakout that we had here on this daily for the 14th of January. From the top of this wick is meeting the bottom of this wick on the red candle. So this is what Occam is talking about, where bears are trying to push the price down enough to fill this gap between these two candles. The reason for doing so is because the theory and technical analysis is that in gaps there's very little support for the price during that time, because this movement happens during post-market trading hours, i.e. low volume hours. So there's not a lot of buyers that have held a position at that point, and it doesn't justify, the theory is that it doesn't justify the price increase. So if the price breaks below that level, then it will cause it to fill the gap, and they're targeting to break this this candle all the way back down to the close of the green candle from the January the 14th. So that would essentially put your risk at $4.10 if you were to buy a position right now, which it's not bad. It's a 40-cent risk at the moment, but we still have momentum on our side. Notice that this is our squeeze momentum indicator from TradingView. Shows that we're still pushing green. We have a red. If we have a red close on the day, then it will push the OBV down just a little bit, but we're still seeing a tremendous amount of volume in the stock now. This is the most volume that it's had in a while, and if we compare this to the momentum that we saw from the August moves, these bumps in volume that caused the OBV to start to climb rapidly happened right around this area, and we still had a lot more moves left to go. So it's interesting. It's interesting.
Also, too, I'd like to just kind of point out. I know you put that video out of mine yesterday, and it kind of spoke on the volume shelves. But if you run a profile from the run up in October, in the middle of October, all the way till now, your volume shelf sits right at $5. So that also might be looked at from traders to be a target of selling pressure, which we're much below that right now. But that could be a magnet to kind of bring BBIG back up to by the end of the week.
Would you actually be able to show that on your chart, Akam? I'd love to put your if you send me the link to your trading view chart.
Yeah, I dropped it in. Where did I drop it in? Livestream chat. Where do you want me to put it in?
You just send it to me in that DM that we've got.
Yeah.
Let me actually switch charts here because this is actually supposed to be my Progenity chart. I'm still getting used to TradingView. It's a little bit difficult for me to use still. I haven't quite figured it out. As soon as I start messing with these charts, I regret it immediately. Okay, there we go. So if anybody wants to watch the live chart on their own, then they can go ahead and head to this link. And as we update this, and if you're using TradingView, you can actually copy this chart. This isn't a sponsored video or anything like that. We're not doing a sponsored stream, and I don't even necessarily work with TradingView at all. I just happen to like their product. The charting is excellent. I'm so glad that Kat turned me on to this product. Just for the indicators, like the indicators are super nice and granular. And if you're a person who likes to code and you're interested in doing that kind of stuff, you can actually code your own indicators with their Pine editor. It's pretty nice. I like it. Hashtag not sponsored, but wish I was.
Yeah, between the open source coding, all the indicators, like I said, the layout, it's low intensity on your devices, and I also just like the mobile and the desktop integration just as much as each other, which is pretty rare for most platforms. Usually it's like, the mobile's not good or desktop's not good. Like I like how they integrated both. So I like that quite a bit.
Yeah. Okay, so we're going to go ahead and go grab Occam's chart here.
I apologize in advance. It might be looking a little messy.
Discord, why do you invade my links? Go away.
Careful about using any codes.
All right. So since we're watching, this is actually Occam's live chart. So any changes that he makes to this chart will happen in real time. This is the cool part about TradingView that I really like, is that you can share this link with someone and you can actually watch the person make the changes without having to do a screen share. So Occam, take it away. Show me what you like to show.
Okay, well, just going back to that volume shelf. So I'm not watching the live stream, but I'm hoping that this is showing up, that volume profile back here on October 11th, all the way to current. Basically, what this is showing you is that there has been buy and sell orders along this $5. I can mark this here, volume shelf. $4. Along this $5 level. And do you happen to know what the max pain is on the options chain for this week?
Currently this week, max pain is $4.50 because a whole bunch of puts got opened up out the money and also in the money.
Okay. So there may, I mean, just just looking at all of this right here, you do have this beautiful 1226 EMA cross that has happened that we were looking for at the beginning of the week. But going back to that gap fill in the 200 MA and that volume shelf, it just seems like this stock wants to be pinned somewhere between what is that 200 MA at? It's at $4.12. Yeah, that $4.50. That max pain kind of, it doesn't always make sense to me, but in this sense for this week, it kind of makes sense, just purely based off of this volume shelf. You're just going to have a lot of selling pressure, and the amount of buying pressure you're going to need to get above that will have to be tremendous, and it'll have to come from some kind of hedging or FOMO into the stock, some kind of outside source that we have not been triggered to yet.
Yeah, and what we've seen in the past with any of these squeeze stocks is that although retail frenzy can absolutely push these prices to unimaginable levels, it tends to take a lot more involvement from institutions because they're able to push the price so drastically and so quickly, since most of their orders are going directly through dark pool or to the exchange as they see fit. Retail, for the most part, doesn't have that discretion, since a lot of our brokers and order flow goes through market making platforms and internalizers, which is a bit of a struggle that we're trying to figure out some way to get around so that we can force our orders to the exchange. Currently, the way that I handle this is by using my Fidelity broker and using directed market orders. And that allows my orders to go directly to the New York Stock Exchange or the NASDAQ accordingly. And by doing so, I'm having more of an impact directly on the bid-ask spread by actually affecting the exchange price. The more orders that go directly to the exchange rather than just through ArcX exchange or through any of the internalizers, such as if you're ordering through Robinhood, you're just not going to see your orders passing through straight to the exchange for the most part. It's going to be handled by the market maker, which is affording them liquidity. They're making money off of the spread between the bid and ask on your order, and it's just ultimately not good for the price. It doesn't allow for good price discovery. So this is kind of an aside. It's not necessarily talking about what Occam is speaking of, where the source of the money or the source of the buying pressure comes from, but it's just something that I like to remind people of, is that when you're buying through a market maker or when you're buying through a broker who sends their order flow to a market maker, you're not having as much of an impact on the price as you might think you are. And although we as individuals may not have much impact, by virtue of the thousands of us who are making decisions every single day in the markets, we have collectively a tremendous impact on the market. I mean, somebody remind me, Occam, you might know this. How much of BBIG is currently held by retail outside of institutions?
Yeah, that's a good question. I don't know. I don't know.
Because I remember hearing something about a 30% figure of retail holding BBIG. And of course, that's going to involve people who are not as convicted. That's going to include day traders and things like that are just jumping in and out of their positions on a regular basis, like just from 1 minute to the next. But
right. And it also includes bag holders too, which, you have to consider those levels of, and that's why I look at those volume shelves of, that's going to really identify where people have gotten in. And sometimes the best thing when you're down on a trade, when you start to come back to net neutral, a lot of the money psychology just tells you to get out. And I'm not saying, I'm not suggesting doing so, but that psychology definitely persists in the market.
yeah. And it's really difficult to fight it because the human psychology is very motivated by fear and self-preservation, and it's just how we operate as humans. It's really difficult for us to break out of that psychology, and it's a survival mechanism. It's the same fight or flight response that hunter-gatherers received on some level. I'm not saying that we're like I'm not saying that we're like having to go fight lions in the wild or anything like that for our survival. But like when we see the price getting hit, like that's a threat to our money. That's a threat to our safety, and we have a natural fear response to try to preserve that capital in order to protect ourselves and protect our investments in our portfolio. And that fear response is very predictable and easily preyed upon by algorithms. And it's a hard thing to do, to deny yourself wanting to give into that fear response, especially because you might know that others are going to give into that fear response, which is part of why Hell's trading floor is so important to me, and I think will be important to retail investors in the long run, is because we're educating people on the technical analysis, but also educating everybody on that fear response that we have in the markets, and that emotional response that we have to seeing the price action, and learning how to look further into the data and not just see the price, because the price is only what you can buy and sell at. It doesn't tell you everything about momentum. It's just not all of the data that's there. There's much more granular data that goes farther below the surface. Like, the price is only what you see on the surface. And considering the amount of data that the market makers have access to, it's really the only thing that they want retail to see. Because if you're only reacting to a single data point, that being price, it's really easy to get deceived into thinking that your trades are going against you. But if you're looking further below that, if you're looking at data like these volume shelves that Occam is pointing out here at the $5 level that we're seeing so much selling pressure at, you look at it differently. When you see how much selling pressure there is, and you think to yourself, like, if we can overcome that and we break past it, then there's open sky above here, all this untested area of potential growth that the stock can reach if it just gets past this one level. If it just can break past this, it's funny that the volume shelf matches up exactly with my alert level at $5.50. Notice that the volume shelf just disappears from there. And that's indicative. It's an untested area, and if we can break past it, then not only is the price moving past that a bullish signal, but also you're going to see moving averages cross to the upside, and that's a bullish signal. You're going to see volume increases, which is also a bullish signal, and all of that plays into factors that are accounted for by algorithms. And this is kind of another aside, but considering that retail is the universal bag holder of the stock market, if we learn to deny our fear response and stop just selling out whenever we panic, like whenever something like this happens, if we stop giving into panic and we continue to ride out these trends, it's amazing what can happen. Things like GameStop can absolutely happen in the markets again, because that kind of fraud continues to occur regularly. It's just that nobody ever was able to point it out and convince enough people that that fraud was going on and that it was actually possible to defeat it.
Yeah, and you also have to consider too, if you're still looking at the chart, you've come up in the last week, you've come up 154% from the lowest point to the highest point, and now you're down 22%. And there's two ways to look at that. You can either say, hey, today I'm down 22%, or you can say, hey, in the last week and a half, I'm up 130%.
That's a good way to look at it.
I'm sorry, that doesn't work out. I'm sorry, it wouldn't be 130%, but you would still be, I don't know the quick math on that, but you would still be drastically up from where you bought in a week and a half ago. So yeah. For me, I'm not even looking at 5-minute, 10-minute charts. I'm looking at 30-minute, 1 hour, and 1 day charts. Really, just the 1 day chart on BBIG, just to kind of see how it's reacting with all these levels. Because watching it on a 5-minute basis, unless you're trying to day or swing trade it and get in and out in moments, there's, if you're trying to swing for the stars, I mean, there's no There's no reason to get anything under a daily chart. It's just going to drive you crazy.
Yeah, it's don't stare at 5 minute or 1 minute candle charts all day long. It doesn't do good things to your psychology because the swings look so much bigger and they look so much more severe, and the volume is completely skewed in a way that just doesn't show you an overall trend. You have to zoom out. That's why people say when in doubt, zoom out. Back up from the chart. Look at things from a more holistic view. If you do that, then you end up seeing more bullish signals than before. Like, look at this. If we go back to the daily chart, look at all this resistance. This is where we hit consolidation before on the downside, and that's part of what I'm talking about with these support and resistance levels. This is something that Occam drew out. But notice the consolidation here back in late October, early November. The fact that we hung around this level shows its significance on BBIG's chart. So it's really no surprise that we got rejected from that level. But now we've hit an area of support down here. And if we stay range bound in this area and consolidate, no matter how long it takes, it may take several days, it may take several weeks. But if we consolidate in this area, then it's still a bullish signal, because what you end up creating is just a bullish pennant with basically a giant flag. If this were to continue to play out where this, we kept bouncing around here for a few days, you just end up with a bullish pattern anyway, because the overall trend says that it's already made this huge move and it needed to relax and consolidate for a while. It's pretty natural movement. Although it looks extreme for the first day, it really shouldn't come as a surprise to you, because you're looking at the holistic view. You're looking at the entire chart going back several days, and you're looking at overall trend, and you still see that, hey, we broke a downtrend, a very clear break of a downtrend. And the fact that we're still hanging out here, even though the price is down this low, if this was a false signal, then BBIG would have been rejected more than 2 days ago. We wouldn't even be trading at this level right now. So the fact that we're up this high after such a prolonged downtrend, this is just pullback. So there's no reason to panic. If anything, the way that you can look at this is that when these things happen, when you see these resistances occur, you stop being surprised by the downtrend. If you can catch these things at the right time, especially if you're like a career day trader or if you're trying to become one, looking at these resistance levels and taking advantage, like if you're swinging calls and puts and things like that, then these are the moments where you look to sell and then wait for a better entry. You sell your calls, wait for a better entry, or buy puts for the downtrend, expecting some relaxation in the price, and take advantage of that. I'm not saying that that people should only play in a bullish direction, because that's not good for you or good for the market, and it's all driven by speculation. Everybody should educate themselves on how best to make money in the market and take advantage of these things. And the more retailers that I think gain this knowledge and arm themselves with this information, the better off the markets will be in the long run, because if you have everybody operating on the same playing field and it's not just a matter of luck, just catching things at the right time when a market maker decides that they're going to send the price over to the moon, then you have retail controlling the price of the equities market. You have retail that are in control of the economy, and it's more diversified that way. You're not consolidating everything to these giant institutions that make all the decisions, and they're going to be selfish decisions. It's better for everybody overall for the market to be fair, and for these companies' value to be dictated based on the sentiment of the entire world's sentiment, not just the sentiment of institutions that are looking to scalp an opportunity out of the pockets and the wallets of average people and just trying to get one over on us.
Let's go. We're talking.
Oh, sorry. Go ahead. You're good, man. I'm just reading through chat. I have not been paying close enough attention. I want to catch up with everybody.
Oh yeah, I'll make it quick. Just as we're talking, we're seeing that fall in price, and it is. I'm thinking it's going to go and fill that entire gap by the end of the day. That's just a gut feeling because that wick is now just a few cents off.
Yeah, I'm thinking you're probably right, and it's actually probably a good idea if if you do have some profits in calls and you're looking for a better entry. Um, Honestly, probably should have taken some profits off of the top. So if you did take profits off the top earlier today, congratulations. If not, we're about ready to touch the bottom of the. We're about ready to touch the top of the green candle. So I would expect a bounce to come pretty soon after we approach $4. And if you did take profits up here, then this would be the buying opportunity. And this is how day traders really make their money is if they spot these trades really well and you're able to guess these resistance and support levels, or if your analysis is correct, then you sell up at the top, you short it on the way down, and then go switch long again, and you can more than double your position and increase your leverage, or just take profits and then enter the same position that you had before. Play the market to your advantage. I'm not saying that people should just exclusively go long, hold everything, and watch it burn in front of your eyes. It's not healthy. But approach things intelligently, and at the same time, when you see a trade like this where you have where you see an opportunity in the long run, where when you have this when you have this big positive uptrend and you miss this, if you miss this opportunity to sell at resistance and then buy at support, then just don't sell at support. When you're at support, that's your time to be like, okay, if I have some cash, I'm gonna go ahead and add to my position and increase my leverage because this is a nice discount. And I'll wait for the next level of resistance before I sell some of that position, and then make money on those trades. But what a lot of traders do that have conviction in these trades, um, where they're both day trading, but they're also holding like a net long position. So there's like that solid block of shares that you're just holding and you're not doing anything with because you want to hang on to that for the long term. And then they'll have a separate block of shares or calls or puts or whatever that they're just, they're swinging and they're making money off of just that small position and increasing their little basket of dollars that they can use for other trades. And this is what I try to do. Nobody does it perfectly. Everybody makes mistakes or misses opportunities, but that's the whole name of the game. That's the idea. Let's see. Let's go back and read through chat. Thought we already filled the gap. It does look like it does look as though we have filled the gap. Let me go switch back over to the chart here. Yeah, so we touched the top. We touched the top of the wicks and broke through a little bit. Yeah, so we've pretty much filled the gap. We've pretty much filled the gap. So now we're sitting at support level, and like we were just talking about, like this is the point where you would be looking for a buy signal, such as you can look for a MACD cross, or you could just take a look at the RSI and see that we touched oversold 2 times in a row, and this is a good technical indicator that there's some upside ahead of us. So if the RSI is oversold, or if it spends a long time in oversold territory, then that's a good time to buy because it's very likely for the price to start returning to a more balanced level. I love the RSI for day trades. A lot of traders will trade off of the RSI. It's an excellent indicator. Let's see.
Hey, TD, would you mind taking a quick peek at my DM real quick?
Yes, absolutely. Yeah, that's a good point, Kat. I'm
So
not
we could just
sure.
do a quick swap over there, and you could just do the same thing real quick with your stream. We could just
Yeah, you know what? Let's go ahead and do that. We'll go ahead and switch over. We'll head over to Film Studio and let everybody jump in. I'm not sure why I did it this way. I think I was just trying to do something different, but that's a good point. There's no reason not to. Yeah, we'll just head over to Film Studio.
Yep.
Okay. That's all switched over. So thanks everybody in the Discord for hanging out. I was filming this in a private stream room with just me and the analyst, but then I realized that like nobody can talk in here anyway. So there's no reason for you not to be able to look at the stream on Discord, so you're not dealing with any of the lag while I'm speaking.
Sweet.
Cool.
I think we're good.
All right, I think we're good. All right, so we've talked about BBIG for a little while. Looks like our OBV has retraced a little bit on the 5-minute candles or the 5-minute chart. OBV here in the last few minutes has been tracking with the price, so I'll be interested to see what happens on this upcoming bounce here. But we'll just go ahead and let that one percolate for a little while. Let's go check out Progenity. Zoller. BBIG is just taking a little breather. Don't sweat it. I missed an opportunity to day trade my calls. I should have closed some of my calls and then used this opportunity to double my position. That's what I would have been doing if I had been paying closer attention this morning. But unfortunately, I was stuck in a work meeting. Damn work meetings. But Progenity is over here in this area of supply that we marked out. Currently, the volume is still super low, so I'm guessing it just hasn't hit that area of supply that whoever it is that's pushing this down is looking to make their purchase for. But I'm expecting for Progenity to hang out here in this range for a little while. It may take some time. The thing that we're mainly waiting for with Progenity is for them to announce additional patents, but the really big ticket item that we're waiting on is for their executive team to make a PR announcement, including their preclinical trial study data for their Precludia product. Precludia is the preeclampsia rule-out test that Progenity has developed, and I believe that they've been experimenting with it as a marketable product. But there's currently I believe it is it's been a while since I looked at the numbers. Like, how big is the market? If any of you guys on the analyst team remember, how big is the market for preeclampsia testing?
3 billion, I believe.
How many was it?
3 billion.
3 billion. Thanks, Todd.
I think that's like absolute max. If they, I think that's the whole market, not necessarily what it's going to garner initially, but
right. But like, let's just think about like they have the only rule out test for it. So if we're if we're assuming that um, if we're assuming that Progenity was able to capture even 10% of that entire market share, then they would be profitable for $300 million. That's that's bigger than their entire market cap right now. So just imagine if they were able to go to market with this thing tomorrow and they say, "Hey, we managed to land this huge deal with this hospital chain, and we have these partners in the insurance industry." Like, say they got a deal with Blue Cross Blue Shield or Cigna or some major insurer like that, for issuing preeclampsia rule out tests. Then they would actually they would capture more than, God. It's been a while since I looked at the insurer numbers, but the insurers, for Blue Cross Blue Shield cover more than 20% of the EU, I think, and Cigna covers more than 10% of Americans. That would be about 30 million Americans, if I remember correctly. It's been a while since I looked at these numbers, so I do deeply apologize.
Oh, totally understood. No, I mean it's safe to say they're not going to take the entire market initially, but just like you said, that's the interesting thing with corporate healthcare is all they have to do is land one big contract and their balance sheet looks entirely different.
That's exactly what I'm saying. Like, all it takes is for them to go to market with any one of their three products. Like, if they say, "Oh, hey, our preeclampsia rule out test is ready to go to market," and then all right, the rocket's lit. Let's go. that's that's literally all it would take to send their market cap from 200 million to I mean, it market cap is not directly related to company value. Let's just be honest, because the stock market does whatever the hell it wants to do.
Oh yeah,
But
it's
their balance
speculation.
sheet, yeah, the market cap is entirely speculation based. But if you look at the balance sheet and you see the fact that, like, they profit, they make, like, they bring in like 20 million gross revenue every year. And if you suddenly change that narrative to, like, say they even only got 1%, only 1% of that $3 billion industry, or $3 billion market, they would still be making $30 million on top of their $20 million gross revenue. Like, that would more than double their entire gross revenue overnight. So if Progenity is trading at this price currently, and we know that they're heavily shorted down, and also, like, what is it, like 50% of their stock is held by Ethereum Capital Management, it's going to do things to the price. Okay, so yeah, I'm not worried about Progenity. It's unfortunate that the squeeze got smashed, but it's just the way it is. There's still a lot of short interest against it, and I suspect that it's because there's hedge funds that are playing both sides of it. They're trying to make money on the ups and downs. It is what it is. Long term, the company has extremely beneficial prospects. It's got a lot of great things going for it. They've been able to, although we hate dilution, we're never a fan of dilution. We still have to consider, like, now they've got enough cash for them to survive for more than another year while they're doing these extremely expensive studies, and they don't have to worry so much about their eating away at their balance sheet and eating away at their cash that they don't have, and having to take on loans and things like that. So although dilution does suck, they have enough money now to survive for several years. And if you believe in a company like this, that they're going to be valuable, like, if you really want to make money off of a company like Progenity, go buy some leap contracts. Like, think about the kid that bought $7 contracts for Tesla back in, like, I forget exactly what year this was, but this was when Tesla was trading at, like, it was a brand new company, and they just said, "We're going to make a really sexy electric car." And this kid was like, "I've got $420. I don't really care if I lose, so I'll just buy these leap contracts that don't expire for 4 years, and we'll just see what happens." And he bought those, and Tesla went past $150 by the time they expired. So, like, he was set for life at that point. Progenity can be the same thing. Like, I'm not saying that it will like absolutely go to $100 within 2 years, but if you were to buy leap contracts right now, currently, let's actually look at some options data for Progenity. I am showing the wrong screen.
January 2024. You can get a $2 call, 77 cents.
That's really good. That's a really awesome price.
Yeah, it's a silly price considering what they potentially have coming up down the road.
Yeah, that's a stupid silly price. Let me go ahead and pull bar chart up here so that everybody can see this.
I think you're entirely right too. I think a lot of people look at Progenity play wrong. They looked at it as a squeeze play as opposed to it's more of a long-term hold. You know, bio like that, they live and die on PR, and we know they have PR coming up down the road, but you can't force it to happen.
Right. So let's take a look at these calls for everybody who's watching. This is Progenity's call chain for calls expiring in 2024, January 19th, 2024. So these don't expire for 2 whole years from now. And just the $50 the 50-cent strikes are trading at a mid of about $1.16. So you'd be paying for each of these calls, this is the right but not the obligation to purchase 100 shares per contract at 50 cents per share. And to buy that contract will cost $1.16. So multiply this number by 100, you get $116. So if you were to be wildly speculative, you could purchase this contract for if you were to do this right now, if you say that Progenity was trading, if you could buy Progenity right now for 50 cents a piece, you would be spending $500. You would spend $500 to buy 100 shares. Or you can spend $116 for the right to buy those shares at that same price. Now, say that you bought 20 of these. You then just purchase the right to buy 2,000 of these shares at 50 cents. And that contract doesn't expire for a whole 2 years from now. Think about how much money has been made on companies like Microsoft. They've moved by more than $50 since just the pandemic. The same thing can happen to a company like Progenity, where you don't want to risk $500 right now on the shares because it's possible that they may go under. Okay, not saying that I think this. I'm just saying this is the mindset of an investor who wants to lever up their trade, but they don't want to commit all that capital to shares. So you can take a levered trade by using call options that don't expire for many, many years. There's actually another YouTuber called In the Money that does videos on this. His video is called Leaps Are Supreme. I love this video. He explains leaps so well, and he actually illustrates just how you almost can't lose. You can lose on leaps. Things can go wrong. Things can always go wrong. But with leaps, you give yourself such an opportunity to be correct, and you give yourself so much time to be correct. If you had a situation where you bought these now, then for $116, you guarantee yourself the right to purchase these shares at 50 cents a pop until January 19th of 2024. And if Progenity moves to $50, then guess what? You just got all those shares for 50 cents. You just made a 49.5 cent, $49.50 profit off of each of those, minus the cost of these contracts. So like your break even at that point is like as long as it's trading at like $2 by that time, like if Progenity didn't move more than 50 cents by January 2024, you'd still make profit. But say Progenity gets all of this data together, say it releases its Precludia product, say that it goes and it's able to establish partnerships with all these insurance companies, and they do it all within the next 2 years. I don't see any feasible way for Progenity to do and accomplish all of that and still be trading at single-digit prices. So just something to consider. Leaps are a really, there's no safe trade, but of all the options trades that there are, despite the expense of leaps, they're so much safer than taking a wild speculative bet on stupid prices that are expiring like in a month. Like if I were just to go back to February, right now the 50-cent strikes for February of this year are trading at almost the same price. Like they're 90 cents. It's only a difference of 26 cents. So, like, just think about how much more time you're affording yourself just by spending that extra 26 cents per contract or per share. It gives you a much better opportunity to be correct.
Here's a question I'm not sure I even know the answer to. Can you exercise those contracts early, or can you only sell the contract early if it rose in value?
In the United States, you can exercise them at any time. You can also sell them, but you can exercise them at any time. If you give yourself that much time, though, I don't think that you would want to necessarily exercise them early, especially if the price rises that significantly in the short term. You can actually sell the calls because they've grown with their intrinsic value, and then as time goes on, they're more subject to volatility. So right now, those leaps have volatility has almost no effect on them. So let's go ahead and go back to January January 2024. Volatility on these, the IV is super low, and that's because there's so much time between now and the close of the trade when they expire. You give yourself a lot of time, but you also decrease your exposure to volatility. So in the short term, even if the price were to move to like $10, the price of these options wouldn't really change much. But if later on down the road, like say like October of 2023, when these are only 3 months out of expiration, volatility will increase on these because then they go down. There's only 3 months between now and expiration. So let's just postulate a speculative scenario. Say that you purchase these leaps for January 2024. And the price of Progenity goes nuts, right? And Progenity is going to like $20. You're already in profit, but on one particular day, all of a sudden, Progenity just goes up by $5 more, and they have a 25% increase in their price. Just overnight. The volatility of these will have increased at that time because there's less time between then and expiration. So like fast forward all the way to October and Progenity is trading at $20, you get that $5 increase, the volatility in the IV shoots up by an extra 150%. And then the price of these contracts increases sharply. You can actually sell the contracts with some extra premium because their intrinsic and their extrinsic value have shot up. and you can get out of those contracts, and then if the price relaxes in the future, you can actually end up purchasing the shares even cheaper than you would have otherwise. It's kind of wild. Once the delta of these gets to a certain point where it's like the delta's 99, 0.99 or 1.0, like the closer you get to 1, the closer the price gets to, like, basically if you exercise, that it would be no different than purchasing the underlying securities at the current market price. I'm not sure if I explained that very well. I try.
No. I think you're spot on.
Thanks. Let's go ahead and take a look at what BBIG is up to now. I don't expect, just closing thoughts on Progenity. I don't expect it to move very much for a little while. I'm giving it at least a few weeks before it makes any major moves. For those that are holding and have been holding for a long time, I'm sorry that the price is down so much. It really sucks. I did not see this coming, and I'm really wishing that I had been smarter about it and seen the downtrend and maybe played both sides of it. But for the long term, I'm very, very bullish on Progenity. The company fundamentally has so many good things going for it. The products that they are preparing to release have a huge market for them, with just their Precludia product having a $3 billion market, and they're also developing a pill that's able to deliver drugs intravenously directly into the GI tract. That has a market that exceeds more than $30 billion. And if they can apply that to drugs like Humira or to tofacitinib and adalimumab, then they can actually, the market just grows from there. The applications for that kind of technology extend to markets far beyond just the drugs that are currently being analyzed for it. It can go much, much further. Once this technology is perfected, I am very certain that Progenity will never, ever, ever see single-digit prices again. All right, let's take a look at BBIG. So, bouncing down and around a little bit. Let's see if we can reduce this a little. I'm going to take a look at this on the 30-minute chart. Okay. Two off asks where I think the bottom of Progenity will be. I currently see its bottom support at $1.25. I don't know if it'll necessarily reach that level or even if it'll break below it. Anything's possible at this point. But I still think that right now is an excellent buying opportunity. We haven't seen the price this low since the October 4th dilution. So if I had some spare cash to buy more Progenity shares, then I would do it right now. But I've already purchased some additional ones on this particular stock. So, and I'm currently leveraged on BBIG, waiting for this next move. So I don't have any other cash to spare right now. But if I were to consider buying a stock for a long position, it's going to be Progenity. Okay. Okay, so we currently broke below this megaphone. We're looking to see this bounce here and possibly establish a new trend. Really just hoping that that the price won't break below $4 again. But current support is at $4.30. This is right where the gap is, or right at the bottom of the gap. So we've filled the gap. We're just making sure that we're watching for any chance that it would break below. All right. Oh, I did want to clarify, a leap is considered to be a call that doesn't expire for more than a year. A put can also be a leap. It's an acronym that just means long-term equity anticipation strategy. But it's always for a year or more. So think of if you're thinking of like weeklies, monthlies, a leap is basically a yearly option contract. Devil's Advocate asks, speaking of exercising contracts, what if you have one that's in the money but don't have the capital to exercise it and it expires good? Do you get them on margin or do you get cash or what? So if you don't have money to exercise, that really depends on your broker, but you should not be holding to expiration any contract that you do not intend to exercise. If you're holding them that long, then you've made a mistake and you should sell them much sooner than that. If you're holding something to expiration, then you should be thinking of it like, I intend to exercise this when that happens. If you're trading around volatility and doing weeklies, that might be a little bit different because you're doing a very leveraged volatility trade and you're taking high risks to swing them. But when you're doing a leap or if you're doing monthlies and if your plan is to hold it to expiration, you should be planning on setting aside cash to exercise them. If you're not doing that, then they may expire, and if you don't have the money to exercise those and collect those, then your broker might just tell you, I'm sorry, but your contract is expired, and it would be the same as if they expired worthless. So yeah, don't let that happen is what I'm saying. Don't put yourself in that position.
And another small thing to add on to that, I actually had a weird situation where I had a vertical spread that the bought call and sold call expired in the money, so they're supposed to offset each other and collect the difference more or less. But I guess that sold call wasn't in the money enough for that person who bought it from me, their break even, I guess, to exercise. So I guess they opted not to. So I woke up to like 600 or 700 shares of Lucid in my account, and it was like my account was negative like 40 grand. But they gave me the shares, which was weird. Luckily Lucid didn't tank or anything, so I just sold them. My account went back to normal. But things like that can happen, so just be very careful when you're messing with certain things and make sure everything is is how it should be.
That's an excellent point. Yes, if something like that were to happen, then that can definitely really wake you up to a surprise in the morning when suddenly you just like have a net negative account, like $500,000. It's like, what happened? You just exercised calls that you could not afford.
I was going to say, luckily, actually, Lucid went up like 50 cents from there. So I was like, oh my God, like get rid of these. And I was like, oh, thank God. But that was, but it was definitely a moment. I was like, I didn't know that can happen. So.
Yeah, I can easily see how that might lead to a mild heart attack.
Yeah, mild to medium for sure.
Blocks and Blocks asks if I can take a look at AMC. Sure, we can look at AMC. Let's go take a look at AMC. I am still holding all of my shares in AMC, just for the record, before anybody asks. Am I happy with the price? No, I'm not. So right now, let me go and pull these all down here. So AMC just formed a double bottom pattern here. This is a bullish pattern. This double bottom actually is a good sign of upward momentum getting ready to come into the stock. The volume is still pretty low. And I'm just comparing that on a 5-minute chart, but I know from looking at AMC's chart in the past few weeks that the volume right now is just so low. We're starting to get a little bit of a spike in it. The OBV is curling downward right now, though, so this is I would be waiting. It's been in this falling wedge pattern, or this bull channel is what we would call this. This is a downward trend. We call it a bull channel because they tend to break upward, and we're currently at the bottom of that bull channel. So if there is going to be a bounce here, then it could be a volatile one, and looking at this pattern right here, this is possibly the development of an inverse head and shoulders pattern. It's very early yet to tell, so you can't be certain of this, but in this particular situation, this would be the shoulder, and then this would be the head, and then if it continues to completion, then what you would expect to see is a little bit of consolidation for just a short time, a sharp rise back up to the previous neckline, and consolidation here, and then a break upward. And then you'd end up back here at some point in the future. So that's what you look for with an inverse head and shoulders pattern. A regular head and shoulders, which is like this one, this is a head and shoulders right here. You see a break upward, a bit of consolidation. Here's the neckline, and then a rise to the top of the head, and then a breakdown. And the shoulder actually, it broke down much more sharply, so the final shoulder never developed. So it's a very strange head and shoulder pattern, but it's nevertheless a head and shoulder pattern. The neckline is a bit slanted like this. So this is an extremely bearish pattern. Not good. And here's another double bottom pattern. If you were looking at this chart, and we had a break up and a breakdown, and then another break up. So this would be your buy signal here, and then you would sell as soon as you see weakness up here. This is when you would have sold. So a little bit of lesson for people who are looking into day trading and trying to understand technical patterns. So we've yet to see what AMC is going to do in response to this, but hanging down at around $18.50 is grossly oversold. The RSI has been oversold for a few days since Friday. I would expect for AMC to consolidate for a little while here, but we said the same thing about consolidation all the way down here, and it broke down again. So there's a lot of shorts coming in against this stock. I actually would need to go and look at Ortex to see just how much short interest is now up against AMC at the moment. Let's see. Almost 20% short interest. Holy cow. The last time the short interest was this high was back in May. Oh no, we had some spikes back in September. So days to cover, interestingly though, is rising really sharply. So this is actually a interesting sign here. I don't normally put much emphasis on days to cover, But because of the volume is so low, that's what has the most effect on days to cover. Days to cover is just the estimated time that it would take for shorts to cover all of their positions if they were all to attempt to do it at the same time based on the current trading volume. So days to cover is kind of it's kind of like it's kind of a metric for measuring the volume against the current short interest. And a high days to cover while there is pressure on shorts to cover their position would be a bullish signal. And interestingly, we've noticed an inverse relationship between the price and the days to cover. When the days to cover is rising, that's when AMC and other stocks do this too. When days to cover are rising sharply while the short interest is rising, the price will normally consolidate or head downwards because there's more shorts that are growing their position. And if there is low volume during that period, like how we had between April and May, then the effect on the days to cover is even more pronounced. And then suddenly when you have a whole bunch of volume and you see a whole bunch of shorts covering, then you see the days to cover drop down really rapidly. So it's interesting to me to see this inverse relationship between the price here and the days to cover. So as the days to cover are rising, the price is falling. It's also interesting to me that the utilization is dropping. That's strange. Utilization fell from, I haven't looked at this in a long time. Obviously, I have not looked at this in a long time. Utilization dropped from 87 down to 72. So that would mean that there's roughly 30 million shares still available to short. How can that be? How can there be that many shares still available to short when 20% of it is already on against the float? Man. I ask how can that be rhetorically? Like we do know that it can easily happen between ISDA contracts and things of that nature. Let's look at a couple of these other numbers. Interesting. So days on loan are rising, which means that long-term short holders are still holding on to their positions and near-term holders are exiting their short positions while the price is falling. So anybody who's been holding a long-term short position is still hanging on to them. Otherwise, this average days on loan wouldn't be rising so quickly. It's the estimated short interest here. Very interesting. There's not really any covering happening. Haven't touched the threshold list. Security lending volume is pretty much the same. I'm just trying to kind of make sense of all this. Unfortunately, it looks like I was pulled into something for work, so I'm not going to be able to stream for as long as I would like to. Sorry about that, guys. I have to respond to some of this stuff. Okay. Yep. Sorry for the silence there, everybody. Occasionally, I have to check in and make sure that I'm keeping up with work. Let's see what other things do we have to look at here. Look at GME while we're at it. Sure.
Hey, Demon.
Yeah.
Got
What's
a
up?
quick question. So, just so we can clear some of the one question from Rob Davis. He says, Vortex is not useful, not their fault, but they only report what they want. So, what is the use? What will be your response to that?
So actually, I have tremendous faith in Ortex. They've done an excellent job at trying to be transparent, but it's really hard to get their take past all of the noise that has been going on. And currently, as a matter of fact, Ortex is in this Discord. I've spoken to one of the co-founders of Ortex, who's been kind enough to offer to work with us to a certain degree. We're talking about ways that Hell's Trading Floor will be able to contribute to the Ortex platform, and in return, they're going to try to um, help us with providing us a little bit of data that we can use to trade around that information. And in my discussions with them, we talked about the source of their information, and there's a lot of speculation on like self-reported data. And one of the things that they emphasized to me was that the data is not self-reported. The data is actually coming from a central agency that manages loans for large hedge funds and financial institutions. They get it from two main sources, which they did not disclose the names of these companies, but essentially think of them as data warehouses that control the loan data for major financial institutions in the European and the American financial markets. Collectively, those firms control more than 80, they have access to more than 85% of prime broker data in the United States and in the EU. So because of that, they have access to this information and this data that is reported directly to the it's directly reported to these institutions as a matter of tracking loans. So the data is not self-reported. The data is actually managed entirely automated through automated systems. So the data is much more reliable than people speculate it is. It's not just data that the hedge funds just decide that they're going to allow to get out. Like that's not necessarily the case. I'm not saying that it's guaranteed that these numbers can't be messed with in some way, but it seems very unlikely given that information because the data isn't coming from self-reported sources from the market makers and the hedge funds that are trying to like mess with things and try to create speculation around the source of these numbers. It's actually coming from the loans themselves, the loans that get taken out against the brokers and gets reported to these agencies in order to manage them. that data becomes much more reliable because every single day brokers are making money off of these loans, and everybody who's issuing these loans is making money. They have to make sure that they're reporting this data accurately, and they are in order for them to continue making money. So there's no incentive whatsoever to get this data wrong. If the data is wrong, then that's bad for them. Now, what Ortex does is they take the raw data that these companies provide, that they pull from 85% of prime brokers, and they then create they create estimation algorithms in order to get it, like the estimated short interest change and the estimated SI over the free float. These are algorithms that Ortex has created. They're reading the data that's coming from their data sources, and they are crunching some numbers in order to produce these. Now, sometimes these can be wrong. Sometimes these estimates get polluted with bad numbers, or there might be bad updates that come from incorrectly entered data source. Some of these institutions might be reporting their data manually, so there can be a degree of human error that gets introduced into this, as with all things. So for that reason, mistakes do happen. But after my conversations with Ortex, it turns out that the data is a lot more honest than we had been led to believe. There's a lot of people out there on social media who honestly don't know what they're talking about, just screaming about how Ortex is manipulated by hedge funds. And like, there's no basis for that argument. That just doesn't compute. So I don't think Ortex is useless. I think that Ortex is possibly one of the most powerful data analytics platforms that has ever been introduced to retail. And the fact that it only costs $70 a month is actually really cheap compared to how secret this data is. Keep in mind that Ortex is the only firm that has short interest data that they are disclosing to retail. Nobody else is doing this. Ortex is the only platform that even comes close. Kyle Finley, thank you for the $5, dude. I appreciate that. You want me to check out RELI? Sure, I'll check out RELI. Let's finish up GME first, and then we'll go check out RELI. So GME currently also showing an inverse relationship between its days to cover and the price action. We saw this kind of relationship before, actually. So we saw rise in days to cover just before its January squeeze. As a matter of fact, it rapidly moved down during the actual squeeze itself. Those few days before it hit its ridiculous price of $483. Let's take a look at how this lines up on. Oh, whoa, Ortex, what you doing? So days on loan, days to cover has been steadily rising over the period of the entire last year. Exchange reported short interest is still pretty low, but 17% of the free float is still a significant amount of shares on loan, or I'm sorry, short interest. The number of shares on loan is closer to 13.17 million. So that would be about 20% of their free float is currently on loan. 17% of that is sold short. 17.5%. So far cry from what we saw back here when it was more than 100 or 110% of their free float was on loan. But let's see, we're showing these numbers are steadily rising as it's being shorted down. That shouldn't really come as a big surprise to us. There was a huge jump right here by about 40 million shares during this period. So this giant red candle, probably about half of it is just shorting, and then the rest of it is panic selling. So shorts kept hammering and hammering and hammering and hammering it all throughout the period of late December, January. Just as it started to test resistance at $240. I don't find that to be a coincidence. Or $250, sorry. Yeah, $250 at the top of this candle. Cost to borrow is still currently pretty low. For those of you that are targeting a short squeeze, this is probably the data that you're going to be most interested in. What I do find significant is utilization has a lot to do with this. Utilization, the closer it gets to 100%, the harder and harder it is to borrow the stock. And that will force market makers into a position where in order to fulfill buy orders, they will have to take short exempts in order to find those shares or in order to give themselves time to find those shares. In the meanwhile, they'll be taking naked shorts. They'll be doing short exempts, shorting shares without finding a borrower in order to fulfill those buy orders. If the price starts to rise at that point, then they will lose control of the stock. Let's see. On the actual chart itself for GME, looks like it's doing the exact same thing that AMC is doing. Isn't that interesting? Isn't that interesting, guys? Okay. Let's draw a couple of patterns here. So right at about here. So GME was trading in this long wedge for pretty much the entirety of 2021. It had some pretty amazing pops back and forth during these periods. I'm looking for any sign that GME is turning bullish at the moment. I currently don't see one, unfortunately. I'm sad to say that it's currently in a downtrend. It broke below its support on this ascending support line, so it's unfortunately not a good signal. But I tell you what we can look at because we're looking at trend-based. We're going to look at a trend-based Fibonacci extension, and let's just see if we draw along these supports. So we're following the support line and we're establishing that as the base of our trends. So we're basically following the wicks of these candles, or the same as with this little gold line here. If if GME turns around here in the near term, then what we would be looking at is for a retracement back to these support levels. So if you're looking to trade on this information, then what you would be doing is setting support levels at these various lines or these resistances. GameStop is at, let me go ahead and set a support line here just to find out where it's at and see if we find any previous support. So it would have broken down below this support, this area of consolidation that I'm pointing to with my mouse here. This is where it would have found support before recently, and it seems to have broken below these prices. It's not a clear breakout though, so it could bounce from here. But the next support would be down here at the bottom of this gap, so somewhere around $97. If you're looking for GameStop to make a bounce, then I would be setting this as your support at around $100, between $95 and $100. And you can draw this Fibonacci. I like to use Fibonacci's a lot. I'm a big fan of Fibonacci extensions. And you can use this to set your various support resistance levels and see how it reacts to these. But this is most efficient for this. This is the best use for day traders. If you're just looking for a long-term hold on GameStop, waiting for some kind of a squeeze, then the only thing for you to do is to buy and hold. And you have some support here at $100, but unfortunately, there's no support below that until back down here at $40. So you're setting yourself with a $60 risk on that. So I'm sorry if you were hoping for better news, but this is just I'm just reading you a technical chart based on what I see here, and I'm not in the business of selling people bullshit. I'm just gonna tell you what I see in the charts. I'm not saying that this is going to go down to $60 or $40 or whatever. I'm looking at the support level, and that's what the risk is. Okay, let's go ahead and head back up to Kyle's request to look at RELI. RELI. This is Reliance Global Corp. Ooh, wow. Yes, we called this one out a while ago. It's been showing some serious strength. Love this chart. So RELI is doing great. Currently have some support down here at $7. So if you're looking for a buy opportunity and you see a breakdown, $7 looks really nice. We'll draw the top of this wedge here. And then we'll draw our ascending support line. We're right smack in the middle right now. Just bounced off of support here down at around $7.40, excuse me. Bounced off of $7.20 not too long ago. Bounced off of $7.40 here. So this appears to be another area of support. Oh, I'm sorry. It was oh, there it is, $7.50. Okay, I did read that right. So right now it's right in the middle. It looks like it may be trying to make a run for the top of this wedge, at which point you'd be looking for a breakout somewhere around $9.50. If you see a breakout above this wedge, then, I mean, ride the trend. Right at this moment, it looks like it may enter into consolidation for a little while, and it's possible it would break down, in which case you'd be setting, I would be setting a limit to purchase down here around $7.20. That would be an excellent area of support to set a buy order for. And if you're looking to day trade or swing trade this one, then $9.70 is an excellent exit. But on the off chance that you were to see a big bounce, let's see. So for a 10% or so we've got some resistance here just based on this Fibonacci extension that I've drawn, somewhere around $10. It's pretty close to what I had set it for. So if you see a breakout above 10 cents, this is going to be big resistance right here. So anywhere between the top of the wedge and this $10.05 mark is going to be some big resistance. You break through this, and these are the additional resistances that you would set for yourself. I feel like anything above $13 is going to be in the realm of fantasy. So be careful. Be careful. Don't use this as like gospel or anything like that. But if you start to see like some crazy cool breakouts and RELI does end up squeezing, then there's some levels for you to work with. I love using Fibonacci's. They're extremely, extremely nice. I've found them to be tremendously accurate in the past. If I were to actually draw this out to the bottom here, then you actually see that our resistances and supports don't change all that much. But take a look at let me just go ahead and delete this support so that you can see. I'm drawing the bottom of this here because I see this support landed right here, and then look at how the lines end up on the Fibonacci. Like you see this range right here. The Fibonacci is perfectly lined up with this range, and it also sees this resistance and this resistance perfectly. Isn't that interesting? So like I just love Fibonacci's. It's funny how they always end up just working out so perfectly. A lot of it is retroactive and a little bit of like soothsaying to a degree, because ultimately it's only speculation of whether you think it's going to go up or down. But if you look back in the past and you draw the right chart, it's funny how the Fibonacci's always end up lining up. It's just it's applying perfect math to an imperfect science. I love seeing it. It's really cool. So anyway, as I was saying, yeah, if we see a breakout of this wedge, then I would be looking for resistances at $11.40 and then $13. At this point, at this range, there would be tremendous resistance here. So unless there's like some clear breakout and you see it like heading for the moon when you wake up on a Sunday on a sunny morning, then I would be looking to make an exit or at least take some profits at these resistance levels. I'm not in RELI anymore. I had a brief position and I sold. I sold. I think I bought at around like $5 and I sold at $9. So that was a healthy trade for me. I might look to get back into it, but right now most of my capital is committed, so I'm not looking to make any changes anytime soon.
If you don't mind me chiming in real quick.
Yeah, go for it, man.
So I'm sure you probably know this, but for those listening that are using TradingView, when you go to like the ascending and descending line that you have in yellow, you can actually click and highlight that and set an alert to those levels to different kind of conditions, like if it's crossing over.
Yeah, oh, no kidding. That's awesome.
Yeah, and then you can webhook it into the Discord. So like I have just a private my own server that I have for just webhooks. So when I'm going through exercises like this and I find support levels and I'm saying, hey, I might want to buy RELI at $7. Well, maybe I drop a horizontal line there and set an alert, webhook it, and then I can just kind of forget about it. If I get an alert, then I can go back to the chart and decide if it's a play for me.
What? You can do that? That's amazing.
Mm-hmm.
I did not know you could do that.
TradingView is amazing. They really give you the best charting tools, and then they allow you to connect it just to anything and everything through your Pine editor to be able to manipulate all the strategies and indicators, and then all of the webhooks and alerts. But yeah, you can. It's great because it works on the strategies as well. So if you have a strategy that you're testing on a ticker, you can set alerts to that strategy, and it'll just push it, either to your TradingView desktop, to your phone as a text message, or to Discord, or to Twitter. I think you can webhook it to Twitter as well.
Dude, that's awesome. You have to show me how to do this after we get off of this. I'm gonna find some time to actually like dive into TradingView and figure out how all of this works, because that's cool. I had no idea you could do that.
Yeah.
That would be super cool. I was like, man, I wish I could just draw these charts and then forget about them and just set alerts on everything. And
and you can.
And you can. That's awesome. Thank you for showing me that. I didn't even I draw these all the time and I'm like, just pay attention to the gear icon. My eyes didn't even notice the little alarm clock. Like that would have been a clue.
Yeah, well, it took me months before I even noticed it when I started using TradingView about 8 months ago. It took me a few months to catch on.
That's awesome.
Yeah.
God, there's so much to learn. Rob Davis says, am I saying that AMC or GME is less than 20% SI in reality? Come on, dude. We all know these short positions are way underreported by design and regulations allow for it. It's true. The reporting around short interest is extremely opaque. There's no there's no transparency whatsoever into these reports. And although we have discussed like the implications of having FINRA take over all reporting and basically like holding the screws to these major financial institutions to report these numbers might help. Well, FINRA has really let us down before in the past, haven't they? So as I hear what you're saying. Yes, it's very possible that the naked short positions could be astronomical in comparison. It's just there's no way to know. There's no transparency, and there's no way to prove it. So, at least not from where we currently sit. And unless something really major changes in the way that our financial markets work and function, and the reporting is enforced, and the rules and regulations are enforced, we may never know. So I'm just going to rant and rave on a YouTube channel and be pissed off about it and tell everybody that Citadel Securities and everybody who works there is a dick.
Did you mean Citadel? Beep bop.
Good bot. Thank you so much, Rob Davis, for the $5. That's very generous of you. Yeah, please don't be afraid of posting a controversial opinion. I really don't. I'm a controversial person myself. I'm not afraid of controversial opinions. Can I do a DD tweet on Ortex, Matt Lee? If you let me know which ticker it was that you wanted a DD tweet on, I can try to. For AMC and GME, they're shorted around between 17 and 20% of their free float, which is a very significant number if we're following the openly reported. Excuse me, I got the hiccups. If we're following the openly reported numbers, we can speculate on the naked shorting, but there's no way to know those actual numbers. And honestly, nothing's changed. The short interest is still pretty high at the moment, and with the price moving down to where it is right now, with GME approaching $100 and AMC approaching 18 flat, it's there's not much to say other than they're currently in a downtrend. So I'm sure that plenty of other people have been doing a lot more thorough DD than I've done on these at the moment. I'm just holding on to them. But if I find something, you can be assured that I'll go ahead and add something to that. If you want a DD tweet on Progenity, I've already done a lot of them, and really nothing has changed there either. BBIG is the only one that's currently got my attention, although I might do one on RELI since it's looking pretty nice. It's very strong. I'm going to go ahead and draw one more support line, because this looks like an interesting inner wedge. So I'll be looking to see how it reacts to support on this trend line. If it breaks below it, then I guess we'll look for a buying opportunity down here. But if it hits this and bounces, congratulations, you guys are on the uptick. Just reading through chat a little bit. I'm liking to see all this conversation happening in chat. Makes it hard for me to follow, though. BBIG entry thoughts. Sure, Kyle. And thank you for another $5. Thank you very much. BBIG entry. Currently, if I were to look for another entry, it's breaking down at the moment, so it's about to enter consolidation. Any entry between 4 and 4.15 is pretty good. I might set my limit down to $4 just to see if it might get filled. But I see that the candle already touched it, so That would have been the entry actually, but I wasn't paying attention to it. So $4 would have been the fill. This is a pretty good entry level though, if because the RSI has come down off the top, it's cooled off really nicely. The MACD is down below, so you could try giving it a little bit of time. If it's going to bounce, I'm guessing that it's going to consolidate for a little bit, so you'll have at least a few candles between now and close of the day. Let's see on the 5-minute chart. Yeah, it looks like we're entering into some consolidation. The trend is starting to even out, kind of forming a little bit of a U here. So let's see if it reacts. If it keeps bouncing off of this downward trend line, I'm just drawing some candles on the 5-minute chart here for some descending support. See if it keeps on bouncing down here. It looks a little bit like a bouncy ball heading down some stairs. If it keeps doing this, then maybe we'll set a entry. You could set an entry at support would be at around $3.83, $3.83 thereabouts. If it decides to bounce from here, then might catch it on the way up past $4.25. I would wait to see if it engulfs these candles here. You could check that on a 15-minute chart. So we can see if you end up with an engulfing candle here. If that is the case, then that would be a bullish signal, and you can buy on the upside at around $4.25. But that would be a buy signal if you get a big engulfing candle here. Doesn't look like it's going to happen though, so we might enter into a little bit of consolidation. Okay. Yep, sorry that I missed BBIG hitting $4. Not that I could buy anything right now. Escape power added to my sense position today at 269. Could I check the chart? Yeah, sure. I love Sensionics. Show me what you have, Sensionics. Everybody's been joking. It's the battle for $3 right now. It really is. Okay. So OBV tracking with the price on the 15-minute chart. That's pretty normal, more or less. Currently, the RSI is on the low side, not quite oversold yet, but close. The looks like it's the makings of a double bottom. That's a good fill, man. Good entry. Jeez. That is a good fill. I like this pattern. Double bottom here at this point, just below support here. This would make for weak resistance, I would think. And you're currently sitting at support right now that had previously become resistance. Go ahead and set this right here. Bouncing off of this level, I could see the price going down to maybe 265. So like a 4-cent difference based on your upside. I think that's an excellent fill. So good job, nice fill. Let me see this on the daily chart. I need to get my fix of Sens DD right now. Oh, yep. Clearly a wedge. Oh, I need to double check something. Double check something for work just to make sure that I'm not missing any. Okay. I thought that I was going to have a meeting, but it got canceled, so yay. So Sensionics forming a very, very, very big wedge on the year. it has been bouncing off of the bottom of this wedge for a long time. Let's see. So we hit this for the first time on December the 6th, and we have been 1, 2, 3, going for the fourth bottom on this ascending wedge. So this could be bearish if it breaks below. If it breaks below 265, or maybe I'll just go ahead and set an alert on this trend line, actually. If it crosses below, then notify me. I'm going to try and use some of this magic that that Occam has taught me. and now I don't have to pay attention to it anymore. I'm hacking technical trading. Thank you, Occam, again for showing me this. It's super cool. Okay, so Senseonics is in this big consolidation here. This is actually pretty bullish considering where we came down from. This is grossly oversold, and the RSI is starting to heat up a little bit. So we're in the midpoint right now. If we get one more pullback, then and don't break below this trend, then the bounce might be pretty nice. I am very much hoping to see us break $3, in which case our upside could be all the way up here at $4. And that would actually line up, if that were to happen, into a cup. And if we formed a cup, then I'd be looking to see us form a handle and possibly break out of this wedge. So a little bit of speculative technical trading, looking at a few patterns that might develop in the future. But this is a very nice beginning formation of a cup. So I'm looking to see if we get a nice upswing. If I see us break above, I'm going to say $2.85, because we'll be approaching resistance at that point. Actually, I'll just call it $3 resistance, because that's really where the resistance is at. Y'all let me know. Cool, cool, cool. Excellent. So, right, skate power. Thank you very much for that call out. Senseonics is looking like it's showing a little bit of consolidation and possible strength here. The volume is still really low, but we're halfway between now to earnings, and I'm expecting there's to be some really good news. We're waiting on FDA approval for Senseonics 180-day continuous glucose monitor called the Eversense XL. And if this thing does go to market, it's going to open up a much, much bigger market for Senseonics to overtake Dexcom as the leader of continuous glucose monitors. And I firmly believe that Senseonics product is way superior to Dexcom's G series and Free Libre's transdermal glucose monitors. I have spoken very, very verbosely about all the reasons why I like Senseonics. So if you want to check that out, you can go back to my past DD videos on the channel. I've talked at great lengths about Senseonics, so I don't want to bore everybody with those details again. Let's hope and pray that Jason is okay. Agreed. I'm really hoping that Jason's okay. He still has not reached out to me at all. I have not heard anything from him, and I'm a bit concerned that he never messaged me. It's been almost a month, I think. Just catching up with chat here. Sorry for the silence. Can I give a recap on BBIG's outlook for this week and the next? Absolutely. So BBIG, like I was saying in my video from the other night, I'm looking at these big bumps in the OBV as a sign of bullish divergence. Right now, the OBV is only down just about. Let's see. We went from 2.4 billion down to 2.26 billion, and if you recall, BBIG made moves back here that was just a difference of a couple hundred million. So this was only the precursor. This is just the beginning, as far as I can see, looking back at this chart. BBIG makes these really, really weird moves where it creates these consistent wedge patterns, and every time that it hits the tip of the wedge is when really big moves start happening. So I've drawn this before, but I'll draw it again. It's kind of like sails on a boat a little bit. So what I noticed with BBIG is that when it crossed below these major trend lines and stayed below there in consolidation for a while, there was always this unexpected pop that just came out of nowhere. And as time has gone on, it's taken longer for the pops to develop. So what ended up happening here, BBIG got way oversold down to like $1.20, and it rose for a little while, for several days. The OBV was really small then, so it's hard to see it now. But if I go all the way back here, you can see that the OBV suddenly, in the low volume period, suddenly volume started coming into it, and it had like a 20% rise relative to 40 million. So that's like 6 million in volume came into the stock and started buying it, and that's significant. That's a 20% increase. So every time there's been a 20% deviation in the OBV, it always resulted in this just gigantous move. And it did it here on April 16th in 2020. It did it on January 21st of 2021, which is just before GameStop squeezed, actually. And it did it again on starting August 26th, 27th of 2021. And this was the most pronounced move. Now, the OBV took about a full trading week for it to for all the trading ahead of that move to show up. So I'm expecting it to take a little bit longer. In this period, it took about a full trading week for it to develop, and then suddenly the move came and the pop was massive. And each time the volume's gotten bigger and bigger and bigger. And even though we had a huge move in these past 3 days, the volume still only just came under the top of the previous volume. And if you look at the past, the volume's consistently gone a little bit higher each time. I imagine a little bit because of retail involvement and a little bit from major institutions getting involved as well. Retail was hardly involved in BBIG before April of this year. It was only after April that of last year that that retail started to really get in on this stock. And I would say that it didn't really get popular until August of last year. What did I just do? I went to a Tesla chart for some reason. So, like I was saying, at the moment, BBIG has a very bright outlook. This is some healthy pullback as far as I'm concerned. It's currently testing its support at $4, and this would be a great buy opportunity if you had day traded and sold at the top that we recently had If you read that, congratulations. That's an excellent exit. And excuse me. Sorry, I think that whatever I had the last couple of weeks is still trying to hang around. This little bit of pullback, this 10% pullback that we see in BBIG here is not as severe as it might look at first glance. People are obviously going to be like, panic, but just try not to. I talk about the fear response. Just try not to give into the fear response. This is healthy pullback. We've gone back to back 20% gains, and now we had a big gap up and we filled the gap. I want to point something out here on this chart in particular. When I go back to the daily chart, BBIG did the same thing. It had big green candles. It had this rapid increase, giant green candle, a gap up, and then a gap down, and it filled those gaps very quickly. But shortly after, the squeeze just took off, and it took several days for it to go to its high point, more than 2 trading weeks. So as far as I'm concerned, I'm very comfortable staying in my positions with BBIG. I see this as a healthy pullback. We've had back-to-back 25% gain days, 3 days in a row, 4 days in a row, actually. So, like, if we give back 10%, that's fine. I'm okay with that. We're still in a massive uptrend, so I'm not sweating it too much. So back-to-back 23, 22, 15, and then 27. So 4 days in a row collectively, we've gained 100% of the stock. We've gained more than 100% the stock's trading value since the beginning of last week. So, like, we're doing fine. If we give back 20%, okay, that's fine. We're just paying off the RSI. You know, it's a donation to Charon on our way. You know, throw a couple coins to the boatman. So I would be looking for to add to my position if I had some extra capital to add to it. But my next area of resistance after we bounce from this support is going to be 550. If there is enough excitement and buying volume that comes into the stock from either institutions or just retail frenzy and FOMO, or delta hedging, remember we have a ton of options that are set to expire in the money on BBIG. Let's go back to bar chart again, just to talk about this very briefly. Look at the open interest numbers, and you see just how many shares are expiring this week between now and Friday. And like a lot of these have disappeared in the money. The volume has stayed really low, but the open interest fell, and that tells you that people were exercising their calls. This is a good thing. Exercising your calls, your in the money calls, actually creates more delta pressure on the stock, because it forces whoever's holding those calls to deliver shares to you. And if they do not hold the underlying securities, then that forces them to go into the market and purchase them at market price. So it's an excellent momentum builder when a lot of people exercise their calls early. If they see an opportunity where they want to go and get those shares, and you can sell calls, or you can buy puts with at the current trading price, and then look for ways to hedge your bets just by. If you have the money to purchase those underlying securities and exercise those calls, then you can do other things with those shares in order to generate income by selling options or buying other options to guarantee yourself a favorable exit, and try to make money on the day trades in the meanwhile. Or if you just believe in BBIG for the long term and want to hold those shares for like the next 4, 5, 6, 7, 8, 9, 10 years, then this is a great way to do it. It's a good entry. Long term, I think that BBIG is probably going to be a very successful firm given the figures that are leading it. I'm kind of pissed off with their executive management team, because they honestly have had so many screw ups that they've really irked me. But at the same time, I can't deny that the guys who have led BBIG have had successful businesses in the past, so they at least sometimes know what they're doing. And they're an acquisitions company that's playing into the NFT and crypto market, which is only going to grow further as time goes on and crypto becomes more popular and mainstream. So I don't really necessarily see BBIG as a bad long-term play. I'm not playing it that way. I'm choosing to use BBIG as a swing trade. But other people that believe in this company for the long term, more power to you. It's not a bad company. I think that fundamentally they have some good prospects. I just have more conviction in other trades for my long term strategy, and for me, that's things like biotech and Progenity, Senseonics, and Pfizer. So, yeah, those are my thoughts on BBIG. I see a lot of upside, especially if more of these calls continue to get exercised in the near term before the end of the day today. If most of these in the money calls get exercised today, then they would be forced to be delivered by Friday, and that would be in time for options expiration. That kind of buying pressure that would take place over the next 2 trading days would be, in my mind, significant enough to push the price by several more dollars and could end up driving more of these calls in the money, which only adds to the delta pressure on, or the gamma pressure on, market makers to delta hedge their positions. Wilson Jerome, thank you so much for the $5. I'm sorry that I was going on and on and on about BBIG, but I will be happy to take a look at BBLG for you. Bone Biologics Corp. What is this stock? What is this stock? This looks like it was algo traded like a son of a bitch. This chart's all kinds of messed up. I'm not sure what to say about this one. It looks I don't actually think that there's really much that I can tell you about this stock. There's not a whole lot of technical patterns to go off of. It's just been doing a sine wave consolidation, and then every now and then, for whatever reason, somebody just buys a whole ton of stock and drives the price to sky high for all of about 5 minutes, or 4 hours in this case, with the chart that we're looking at. And try looking at this on a shorter time frame with the 30-minute chart. Algorithms play with this one too much, and it looks like it's probably a low float stock is what I'm guessing. The OBV is doing all kinds of wonkiness and weird stuff. I don't really have anything to read on this, unfortunately. Anybody on the analysts here, do you guys have anything that you might be able to add to this? Because I don't see a technical pattern here.
I think they've done some splits back in July 18 and then again in October 21.
Okay, so it's one of those split stocks, and then it drives the price to the ceiling, and then it just falls down from there. I got you.
Yeah, I don't think it's a true representation of the actual price. If you go on Yahoo Finance, basically your maximum is like $6, 6 and a bit.
I got you. Yeah. Let's see if we can pull the float up on this one, just because I'm curious enough to ask what the float is, because the float has quite a bit of bearing on stocks like this. If it jumps around in price a lot, it's usually because the supply suddenly gets starved out of nowhere, and then everybody who wants it is like, well, sorry, you got to pay the premium. And that's usually because one financial institution is holding all the shares. Where is...
It looks to me like it's a micro float. 3 million shares, 32 million market cap.
I gotcha. Okay.
And then you have...
Yeah.
Yeah,
10 million shares outstanding, 3 million on the float. Insider ownership is 70%. Okay, yeah. So institutions are playing with this one. I need to do some deeper due diligence on this company. I don't know anything about them or what they do. I'm assuming that they're some kind of a biotech company just based on their name, trading on the NASDAQ, but they're dangerously close to delisting based on this price. I'm not sure that I would be willing to take a risk on this one just on the charts alone, and I would need to do a deeper dive on this one to figure out like what prospects the company has or any catalysts. So I'll put this on the analyst radar, guys. If you want to volunteer yourself to go and look into this stock a little bit further and see if there might be an opportunity here. Sadly, I don't think that we'll get anything out here in time to for the end of this video, but we'll take a look into it for you, and if we see some opportunity here, then we'll probably talk about it in the Discord. We usually only have time to talk about tickers like this in the Discord because we're covering it 24/7. Everybody who's around the globe here in the community at Hell's Trading Floor are constantly talking about stocks like this, so you can get good due diligence from that platform. But if you're waiting for me to do a YouTube video on it, I'm sorry, it's probably not going to come just because I don't have time to do every single ticker that comes across my desk. But if you want to get your hands on that kind of due diligence, or if you want to surround yourself by a community of really intelligent traders who've been doing this for collectively more than 100 years between all of us, I mean, geez, we have over 600 members now, so there's tons and tons and tons of experience here sitting on Hell's Trading Floor waiting to teach people something. If
Actually,
you're interested in
I
helping
don't
out.
want to. I don't want to interrupt, but actually, we cracked 800 members today.
What? We cracked 800?
I really thought I misread it. We were at 810 members.
That's nuts.
I
That's
know.
nuts.
I
I
just
missed
posted
it.
this morning, or
I
I
was
think
so
last
sad
night,
when
where
I was so sad when I looked at the member count and it was at 699, and I'm like, no, I missed 666. That was such an opportunity to harass everybody. Ah, man.
all right, time to start kicking people. We got to get it back to.
We got to get back to 666 just for the memes. Sorry, everybody. We're just going to start axing members.
It's just random.
Someone short us.
We'll Thanos it. Just
sorry to come and interject. BBIG just broke out of the wedge
Oh, did it really? To the upside?
to the upside. Yes.
Oh, lovely.
yeah, 428 pushing over the EMA as well.
Oh, fantastic. That's beautiful. Okay. Well, there you go. There was your buy signal. If you were waiting to see if BBIG was going to break its downtrend, this would be the time. It may it only just broke out, so expect it to hit some resistance. It may consolidate for a little while longer still, but this is a clear break of trend. So at the very least, it increases our confidence that we're not going to continue to the downside. We may even go straight up from here. Who knows? We'll see what happens. But this is a nice, good, clear break of trend, and something that we've been waiting for all of about 2 hours. So, like, not too bad, right? Like, see, that wasn't so bad. We went down by 20%, and look at that. Now we're only down by 15% just from yesterday. That's not so bad.
Been a long, arduous road.
Right. And like I said, this is the makings of the beginning of a cup. And so if that does come to completion, then expect there to be some resistance at $5 and then possibly some consolidation or even a little downtrend just for a little bit of time. And then we'll hopefully see some upside. If you are holding options and you are on the fence about exercising, the way that I see it is if you are holding to expiration, you should intend to exercise. If you don't know you're going to exercise, now's about the time that you want to be rolling your calls because now you have an upswing coming your way. And if the stock price is going up, your volatility is going to rise. So this is the time to start looking for a good time to roll your calls. This is a good time to talk about managing your risk with calls. Anybody who's doing this for the first time or is new to options trading, this will time to perk your ears up and learn a little bit about managing options risk. So volatility on especially weekly options, those stupid YOLO weeklies that everybody loves to open, like, yay, it's Monday, I'm gonna buy a call expiring Friday and hope it goes up by 100%. Like, if you're doing that, whew, man, I'm sorry for how much money you've lost in your career. Hopefully you guessed correctly one time and made stupid amounts of money that you can do that. But if you want to trade intelligently and manage your risk, then here's how you should be thinking about it. If you bought a call that was not expiring for like a full month, that's how usually I play these. I'll play them 30 to 60 days out. Sometimes I'll go a little bit shorter time frame, especially if I'm trading on volatility. But for the most part, if I'm trying to trade safely and I'm trying to manage my risk, I'm buying 30 to 60 days till expiration. When you are approaching expiration with those calls and you're not sure if you want to exercise or if you're really close to your strike price and you're looking for a favorable exit to either roll your calls or exit your position, look for these swings here. These moves, these candles are probably going to be the most significant period of volatility that you're going to see on BBIG's upswing just in the near term. So it's still early on in the day, but we're at Wednesday now. So theta is going to start kicking you in the balls, right about tomorrow morning. Thursday is not the time to be looking to exit your options. If you're holding till Thursday, then you better be ready to exercise because you're deep in the money. If you're not deep in the money, or at least in the money by a couple of strikes, then you should really, by Wednesday, consider getting out of your calls. And if you want to stay in your position, roll your calls for another 30 to 60 days. That's a good way to manage your risk. For a short-term trade like this, you might want to shorten that days till expiration, especially if you're playing a squeeze. If it's looking really volatile and you're expecting big moves, you might shorten that time frame a little bit. You do you. Think about it, but always consider your risk. And when you're at this position where you're like, I don't know if I'm ready to exercise my calls, or I don't think I have the money to exercise these calls, then you go ahead and roll them out. It's time to roll those positions, and you want to do it when volatility is in your favor. So you can time this a little bit. You don't have to roll them like buy. You don't have to sell to close and buy to open the next one at the exact same time. You can look for this upswing, or you can set a resistance and wait for it to move to that resistance if you're willing to be a little bit risky with the value of your calls. But say I'm expecting BBIG to make a move to $5 before it hits resistance, then that's what I'm going to do. I'll be patient. I'll wait for these candles to make their way up to $5. I will sell my calls. Then I will wait for it to hit that resistance and it will consolidate. When it does that, that's what's going to cause the volatility to start to peter out, and the volatility will drop. This will bring down the premium of your options that are expiring a little bit further out. That way, you're selling your options that are expiring very soon, and you're getting a good price for them and selling them favorably right when the volatility is at its highest. And then after about like 30 minutes goes by, or just before the close of the bell, or even like right at the close of the bell, you might hope for like a big red candle or something like that. But usually you don't want to do that because that's when the volatility gets ridiculous. So what you do is right when you see a lull in the stock's movement, that's when you look for volatility to drop out on your strikes, and you'll go ahead and purchase something further out expiration. So right now, volatility on volatility on these strikes is super high right now. The volatility is like over 300% implied volatility, and I don't have the Greeks here, but Vega would be the Greek that would be dictating the price movement on these. The bigger your Vega, the more this percentage has an effect on the premium. So if you're looking to get a good price, you want to be looking for, if you want to get a good price on an option that you want to roll out, you want to sell your option when the volatility is nice and high, and then start looking at, we'll say 15 days to expiration. These are where my calls are at. I've got some calls for February 4th. And I'm looking at these currently for $4 is where I set my strike. So right now, if I were to see the price right now the price on these is rising, so the volatility is going up pretty high. The ask is currently at 94 cents, and it will continue to rise. But if I'm looking to buy these calls, or maybe buy a little bit further out the money to increase my leverage, then I'm waiting for the price to. Once I've sold my calls, I'm waiting for the price to just basically go sideways for a little while, and then the premium will start to go down as volatility ticks down. You might see this drop down by by 10, 20% points, and you might get a better fill. You're kind of nickel and diming it at that point, though, so you want to be confident in your technical analysis if you're going to try to do stuff like that. If you're trying to just roll out your position very quickly, secure your next expiration on calls, then just wait for an upswing, sell your calls, buy further out, call it good, and just manage your risk that way. Not financial advice, by the way. I am an amateur trader after all. This is just amateur education hour. Okay. Someone was asking about OPFI. Looked into it. Good financials. Huge short interest. Could check Ortex on it. Yeah, try. I'll go ahead and check the Ortex on that. I'm probably going to have to close the stream here pretty soon. I'm thinking in the next 15 minutes or so. Just a heads up for everybody. Let's go look at OPFI's short interest. Interesting. So, yep, it's oversold. That's for sure. About 27% short interest is estimated on this one. The exchange short interest is showing it a little bit further below this. So there's a little bit of discrepancy there. Let me get rid of the days to cover. How's this on failures to deliver? Really high on failures to deliver when it got smashed. Has not yet been on the threshold list. Security lending volume is consistently peaking at around 500,000 shares. And currently short interest is still at a relatively steady climb as of recent. So there was a bit of shorts that covered, about almost 1 million of them, covered in a 1-week period from early December 7th to December the 10th. And the price was trading around $5. So let's see, we've got about 1 million shorts that have been going in and out of their positions. What's the age on these? Oh, the age is climbing. Okay. So a lot of shorts have been in here for more than 40 days. If I were to go back to December, so about December 1st. Okay, that's interesting. So from about December 1st onward, this is where the average loans are at. Late November to early December is where the average shorts cost basis is. So right around $5.25 or thereabouts. Take a look at the float on this one. Speak to me, Stockbot. Okay, shares outstanding are 109.9 million, but the float is only 13.5 million. Institutional ownership is 41%, which means that most of these shares outstanding are held by the company itself. So it's held by insiders and in their treasury. They have a lot of issuable shares that are available to be put out into the market, but I'd be interested in seeing what other fundamental drivers there are here, if they've got warrants outstanding or anything like that. That could be significant. The utilization is quite high. 91.33% utilization is huge. The cost to borrow is rising to 15%, which is a little high, but not brutal. This would be equivalent to a 15% loan, kind of like paying off a credit card annual percent rate of interest. So if you have like a 15% or a 14% credit card, that's about what shorts are paying for their positions based on their cost basis. Right now, the price is hovering at around 550. It looks like it got smashed again. Verde, do me a favor. Go get ScourgeBot and tell me what it says about the short exempts on this, because this one could be a short squeeze candidate that we might want to put on the radar. Thank you again, Try, for bringing this ahead in front of us, and to whomever that user was in the Discord that brought it to your attention as well. I'm sorry that I'm struggling to look at all of the chats simultaneously, and cheers to the mods. Mods, if I'm missing any stuff that is happening in the chats that everybody's asking about, please go ahead and just smack me across the face and let me know, hey, you're ignoring your fans. I shouldn't call you guys fans. You guys are proper researchers.
I'm your fan.
Thank you, Cat. One fan. All right.
BBIG is making a nice little push. I think it hit a 444 there for a moment, taking a little breather. So.
Oh, nice. See, this is what we were waiting for. This is a nice curl up, bending back around. So this is pretty much confirmation that we're breaking that trend. We want to be sure that it's not a bull trap. So if it was going to break down, it would have broken down around here. This would be a bull trap. If we're looking at this as if it was a bull channel or a bull flag, this is a bullish pattern because it's a channel that's heading downwards and they tend to break upwards, hence why we call them a bull channel or a bull flag. So we refer to a bull trap if we're in a downward channel and it looks like it's going to break out of it, but it only breaks out very briefly and then comes crashing back down and just gets smashed. And then it continues on the trend, and then the bulls are very unhappy. But now we've got several candles that are consistently rising and bringing us up above that level, so now we're a little bit more confident. And the longer we spend out of this channel, the more confident we become. Let's see, what else am I missing here? Because I'm sure I'm missing some exciting things that everybody is bringing here. Oh, I see somebody's doing some profit calculations on, is this Progenity? Those are some lofty figures there, Prague Princessery. I'm going way back in time in the film studio chat on Discord. Dilly says that we should have an Occam's phasers, how to use TeamViewer better class in HTF sometime soon. I agree. And you know what? I'd want to film that on YouTube. Put that out as a video because I feel like everybody can benefit from better trading tools.
That would be fun.
That would be really cool. I would love to learn everything because you've been trading on TradingView for a few years now, haven't you?
TradingView specifically, I think just like 8 or 9 months have I connected a broker through it. I mean, I've been using it for longer for charting, but specifically for trading, just a few months.
That's dope. I would love to be able to connect TradingView to my brokerage account with Fidelity. That would be awesome because I hate Fidelity's interface. I can't help it. Fidelity's interface makes me want to vomit all over myself. It's so
So
disgusting.
they are kind of limited on who you, the brokers that are allowed in. You can click down, I believe, on the trading board down below at the very bottom part of the screen. It should open.
Which one down here? Trading panel?
Yeah, trading panel. And then that'll give you a list of the connected brokers.
Oh, okay. Bitstamp.
So you would have yeah.
That's really cool.
It's kind of centric to futures and crypto right now.
Okay.
It's not really best set up for just kind of your average day stock tickers because you can't connect in a Fidelity or like a Webull. It'd be great if they could allow all different types of brokers, but they're not set up that way yet.
Yeah, I know that Webull uses the same underlying engine as TradingView. Like they use the same coding framework in order to build the charts, which is why their charts interface looks very similar. But I just love TradingView so much better because it's so much better maintained. I would love to connect an actual broker through this. I don't recognize a single one of these. But maybe we'll do something with the paper trading account because you know what? We've been doing we've been talking a lot about like doing paper trading alerts and stuff like that and like managing a fake account just to be like, hey, here's what would have happened if we had like done these calls or done these puts or if we invested this stock on so and so date and things like that. You know, just like trading with funny money and showing people what potential earnings can be like if you trade just based on the knowledge that we're offering.
BBIG pushing 450, by the way.
I see that. Watching it happen is pretty exciting.
Oh, you do have the chart up. My apologies. I was
You're good. You're good. I appreciate you keeping my eyes on it. See, there's no reason to panic. Everything's fine. BBIG will not let you down. This pullback was pretty, like, I was hoping, because I know that I put out some messages out on Twitter the other day being like, that's like, look at these movements. Like there might be a big gap up and like maybe we'll see 100% gap up. I don't know. But like it was a lofty expectation. I understand that. And I'm sorry. I'm sorry if I maybe set expectations a little bit too high. But I ultimately think that BBIG is about ready to squeeze. And I think that this action right here is just either it's somebody who is looking to try to keep control over the price and is really trying hard to exert that control and throw their weight against the stock to scare people out, or it might just be somebody who's using an algorithm to go ahead and give themselves a better price on some call options. Speaking of that, why don't we talk about Tiblio? I would love to talk about Tiblio. Tiblio is awesome, and I don't know if any of you guys heard on Hell's Trading Floor, but Tiblio is now an official partner with Hell's Trading Floor that has been so kind as to give us an affiliate link. Tiblio is an options screener, and every single day at the market bell, Tiblio updates all of these different market screeners for potential candidates for significant moves in option strategies. One of the things that I like about Tiblio is that it focuses entirely on options interest and deviation in options interest. And of course, I'm a math guy. I love seeing how much interest there is over time and changes in interest in particular stocks, because it's indicative that somebody knows something, especially if that somebody has a lot of money. So if there's going to be a major move in the stock, you're going to tend to see it reflected in the options market before you ever see the actual stock move itself. I found a couple of different plays with Tiblio. I found CS, which is Credit Suisse. Sadly, their CEO just out of nowhere resigned, and that was completely unexpected. But if I had sold my calls just a couple of days ago, I would have had 20% gains. Sadly, now I have a 20% loss. Oh well, it happens. But there have been other plays that we've made. IBM made it on here. We did a trade on AbbVie based on it, and Tiblio has been consistently making some really killer picks. We're working on a way to do some paper trades and automate some of the trades based on Tiblio, and so that we can track the performance over time. That's currently in the works, but once we get that in place, we'll be able to show everybody just how good Tiblio really is. And one of the other things that I love about Tiblio is that they'll actually show you some proper spread strategies. I love using vertical spreads just because it's a way to lever your trade with options without presenting too much risk. So, like, let's take a look at. Let's just take a look at the top one, LNC. So there is a this is a let's see, this is a naked put spread. Okay, put spread. So this if you're not familiar with spreads, a spread is when you buy and sell an option at different strike prices, and what you're doing is you're trying to minimize your costs and limit your risk, and you're also limiting your maximum potential gains. And it's a way of managing your risk when you're doing options trades, but not sacrificing the potential gains if you see a significant move coming in the short term. So a good example of this is we played call spreads on IBM for a long time. IBM, this was spotted by Cat Moores, one of the analysts here up on the film studio with me. And where did you spot IBM again? What was it that IBM spread that we picked? It was like 30 over 135, 130 over 135.
Yeah, well, we ended up doing a lot of different strike prices because I mean, I started it around December 14th is when I picked it up. And I just had mainly just calls on that one. But I know you, I think, did I believe the 130, 135. I think it was a continual kind of gradual rising of those strikes as the play continued.
Yeah, we were having a really good time with IBM for a while. It was actually because of this major gap down, and IBM was doing really poorly for a long time. And then I think you said that it was right about here, Kat, that you called it out like early December, first week of December. Is that about right?
I believe when I went back to the history, the first option I bought was on December 14th.
December 14th. Okay, so it was over here. So we saw this. Okay, so you saw the cup had formed, and then we're looking for a handle or an inverse head and shoulders pattern as this fully played out.
Yeah, just very oversold. And then that gap is really what attracted me. Obviously, I was just like, that is just a lot of free range. And look at its history; it always kind of bounces in there.
Yep. So because of that, we were able to play like weekly or bi-weekly vertical call strategies. That's where we buy a call at a lower strike price and sell a call at a higher strike price, and then you make profit on the difference. And then your max profit is capped at that upper strike. So in this case, bought the first option on December 14th, so it was currently trading at about we'll say like 125. So you could buy a call at 125 and sell a call for 130, and then lo and behold, a few days later, like one trading week later, it was at 130. It hit our max profit, and I think that like if we had held those to that point, like you would have made your max loss. Our max loss would have been somewhere like a couple $100, but our maximum gain was over $1,500 per contract. So it was an extremely good bet. We were having a great time with this, and vertical. This is when we introduced vertical call spreads to the Discord. If you have not ever seen a vertical spread or you do not understand spreads, check out the tutorial videos on the YouTube channel. We have a special playlist for tutorials. It's currently the only video that we have there, but it's extremely informative. We go deep into the weeds about how vertical spreads work, how to determine your maximum profit and your maximum loss, finding good balances between risk and gain potential and things like that. And it was extremely eye-opening for me, and now for a lot of these blue chip stocks, I will swear by vertical call spreads. If I combining that with Fibonacci's just made it all that much easier for me to find excellent opportunities to make consistent profit on stocks that ordinarily I would never be able to afford. Like we can play vertical call spreads on Microsoft, on IBM, on hell, you can do it with Berkshire Hathaway if you want to. There's a it's a good way to expose yourself to much bigger, better performing stocks that are otherwise out of your price range. The only caveat with that is that you have to have access to level 3 options trading, which is that is a bit restrictive, but something to keep in mind. But anyway, back to our talk of Tiblio. Here's another stock that Tiblio had called out to us. AbbVie is doing a hell of a job. Tiblio called out, I think it was 30 days out for AbbVie, and it was, I think that we got that call out here in mid-December, so it was right around this time. And as you can see, AbbVie's just killing it. 135.93 right now. So if we had actually played this, then we would have made some really good money on this. Did we set a paper trade on this, Cat? Or did we not?
AbbVie, we didn't do a paper trade on it. Oh wow, it did go. Yeah, but I did. I was I think I was either on stream with you or I think we were filming a video one day, and out of nowhere, because I had kind of forgotten about that as the sample piece, and the alert went off for going above 140 like way earlier than I expected it to, and I was like, that alert just went off, so it definitely
Man,
in the money quite early.
Yeah, that's lit, man. So one of the things that Tiblio really does for us is it shows us all kinds. It exposes us to a lot of strategies that ordinarily we wouldn't be taking a note of, and I do know that a lot of people here use unusual whales, and so do we. We love unusual whales, but Tiblio is very good about exposing us to like real, like very specific strategies that work out more often than not. And it's been consistently very good at exposing us to these profitable plays. Some excellent ones to take a look at are it mainly looks out for opportunities where there's a huge amount of call interest, open interest on different types of stocks across all industries and markets, and it's mainly focused entirely on options trades and options momentum, options volume, and deviations thereof. So when you see things like the average options volume being at around 38,000, and then suddenly it's up by 500% or something ridiculous like that. I think this is actually like this is 250% or like 225% increase in call volume on Barrick Gold, and the current call interest is over 973,000. I don't know what this company is trading at, but and never mind. And yes, I do. It's telling me right here it's $20. So if I really wanted to play this, I could go and take a look at. I can combine unusual whales with my other analytics data. I can take a look at my Ortex and see if like maybe this is a short squeeze candidate. Maybe that's what they're playing, or maybe I'll go take a look at unusual whales and I'll go see what the call chain looks like and what the flow says. Combining these tools together, using Tiblio to find these stocks that are just like doing all kinds of ridiculous things in the options market and looking for those opportunities. And then combining that with our other resources between unusual whales, Ortex, bar chart, things like that, really gives us a remarkable amount of insight to find these good killer plays on a consistent basis. And that's what this community is all about. So if you're interested in Tiblio, take a look at the link in the description. We have an affiliate link with Tiblio that will give you a discount on the first month of your subscription. Tiblio only, I believe, it's less than $30 a month, which is it's not bad at all. I've really enjoyed using Tiblio, and they've just been absolutely awesome to work with. Their support team is great. I actually had to call their support team several times about like problems that I was having. They were super responsive, super respectful, super understanding, and I've even had some excellent conversations with the with the founding members of the team that do most of the heavy lifting here at Tiblio about different things like call strategies and put strategies and stuff like that. And one of them, as a matter of fact, is a sitting professor that delivers talks and lectures on how to trade options. So it's an excellent resource. If you're interested, again, check the affiliate link down in the description of this video and get yourself a discount on your first month. Let's go take a look at BBIG again because it's exciting. It's exciting to see that it's turning a corner. Imagine if we closed the day green and all of this volume that we saw lifted the OBV again. Wouldn't that be something? What would it take for us to close green today? We would need to break $5.20. Well, we started there not too long ago. Oh, yeah.
I'd say it's shaping up to be an interesting power hour with SPY turning around, and
I would say that you are very correct. Oh boy. Oh boy, oh boy, oh boy. Sadly, I can't stay for Power Hour. Well, not all of Power Hour because I have a meeting at the end of the closing bell that I have to be on ahead of time and prep for. So, unfortunately, I'm not going to be able to stick around for that. But I agree. This is shaping up to be an excellent close today. Despite the downtrend and despite the correction, BBIG is doing exceptionally well. The fact that we're up 100% on the week is that's not something that stocks normally do. I don't know if you guys noticed. So this little 15% correction that we have right now at our current trading price based on our close from yesterday, it's understandable. I would like it to be like 10% or less of a correction. Honestly, the less the better. And if we turned it into a green close today, then that would only serve to lift the OBV by that much. So the difference between this line here would get added and switched over to the upside, and that's just more OBV bullish divergence. So if we somehow take a end up with a run by about 80 cents on BBIG, that would be exceptionally good for our technicals. But just based on what we see here in front of us, BBIG is still doing pretty good. It's not at all in bad shape, and I hope that it kind of instills a little bit more confidence in people. Hopefully, not too many people sold at the bottom. I know that people tend to panic when things like this happen, but like, come on, look at the RSI. It was oversold. It needed to cool off, and it did. So let's just see what happens. Let's see what else I've missed. I have missed so many chats. So many chats. I can't believe that we hit 800 members just out of nowhere. That's nuts to me. Kyle Finley, thank you again for another $5. You know, you don't have to just throw money at me to get my attention. I ignore everybody apparently because I'm so bad at reading chat, and I'm so sorry for that. But don't feel the need to just throw money at me constantly just to get my attention. One, it doesn't work, but I really appreciate that you did. It will. I promise it will go to help furthering the HTF community. I'll cover PLTR, Palantir. Oof, Palantir. Oh, you're looking so ill. What's going on? I never invested in Palantir, but I love their technology. Obviously, from the chart, I'm glad that I hadn't gotten into Palantir because I would probably be very upset right now. And I'm sorry. I'm sorry, Kyle, if you're also in Palantir at the moment, but I do know that this company has some really cool stuff that they're doing with AI technology, so I can't understand why they're not performing. I'm going to have to assume that it's probably going to have something to do with their balance sheets, but let's go ahead and draw some of this. Let's go figure this out. Let's find out what Palantir is doing. Okay. This looks like just one great big falling wedge. Yeah, that's exactly what this is. So this is a bullish wedge. Falling wedges are bullish because similar to bull flags, bull channels, they tend to break upward. It's a very shallow falling wedge on the daily chart, going back all the way to the beginning of this last year or the end of the year before. The chart is showing that it's coming to the close of it, and it's now currently at support. So if you're looking for a buying opportunity to enter a position in Palantir, this is actually not too bad of a price to do it at. It's actually at the lowest though, so you're setting yourself up for a risk scenario of $11.45. So your risk is at about $3.30. $3 and my math brain is failing me. 30 cents. So $3.30 risk, just because you only have this support here below you, between here and $11.45. So there's not a lot of support beneath you, and it's currently at support. This is a falling wedge though, so I would wait to see a confirmation of the bounce. Wait to see for it to start heading back in the upward direction before you commit to that trade. Your resistance is going to be, based on just this last candle here, is going to be at around, I'd say $15.50, $15.75. That range is going to be a range of resistance, or a range of demand. So if the price of, or sorry, range of supply. So if the price hits that price range and it stays there, that's a bullish signal that it is entering into a consolidation wedge around that price range. If the price starts to bend back around towards $15.75 and it consolidates there for a while, then I would look for a good entry there. If you want to play it a little bit risky, you can bet on this support, this downward supporting trend line, but there's no promise that it will bend back around in your favor. It could break below, and in that case, then you're looking at a low of $14.25, $14.30 or so. Wonderbron, yes. I covered RELI a little bit earlier, but it looks like a fairly good squeeze candidate. I remember looking at the Ortex numbers, and the short interest was pretty ridiculously high. And it's heading in an uptrend direction, so it's looking pretty good. It was in the middle of a wedge pattern that looked like it was either going to break to the upside or the downside. It's currently in consolidation. So let's see if I still have it charted out here. I might not. I do have it charted out here. Okay, so I'll revisit this really quickly just because you missed it. I'll save you the pain of having to go back. But this this is what I'm looking at, these two wedges. It's currently looking like it's bouncing off support of this inner wedge. If it does bounce off of this, then I'd be looking for it to meet resistance in the short term at $9.80 to $10. If it breaks above that, then you're looking at some pretty nice upside, anywhere between $11.40 to probably, I would say that a maximum of $13 if I'm being realistic. Short squeezes are anything but natural though, so it can go further and farther, like not necessarily to infinity and beyond, but short squeezes can get pretty ridiculous, and RELI short interest was stupid the last time that I looked at it. So maybe go ahead and you might want to try and chart this out yourself. I am looking at a Fibonacci extension starting at the top of this candle to the top of this candle, and then I set my bottom on this candle. TradingView forced me to extend it out like this because of how it draws the resistance and support lines. But this is my support candle for the bottom of the fib extension, and that's what I'm using to trade this out. Okay, just so you can see exactly what I'm talking about. So big resistance at $9.30 and $10. Keep an eye out for those, and good luck. Thoughts on Progenity hitting $3 by March 2022? If they get this announcement and they put out their preclinical trials, I don't see why not. $3 is very much in the realm of reality. After close yesterday was beautiful with BBIG. Definitely not worried about these pullbacks. Fear loves to kick in when natural things occur. You got that right. I've talked enough about the fear response, but yeah, BBIG has gotten a lot of people scared just because it took a little bit of a pullback at 20%, but it's starting to turn around very nicely. I actually love this candle. It's turning actually into a really nice. It's actually not too bad. I'm trying to think of what this candle is called. I might be talking out of my ass and not actually know what this candle is called, or even if it has a name. I at least know that since we're getting ready to touch the bottom of this red candle, that there's a possibility that if an algorithm did this, that it may flip. If we start to challenge the bottom of this candle, it may try to buy back its shares if they did not accumulate their supply back. Keep an eye out for the MACD getting ready to cross the signal and the EMA. Yep. Excuse me. So I'd be looking for this MACD to cross here very soon. It looks like it's balanced out a little bit, or leveled out a little bit, and is probably going to start making a swing up again. If you haven't gotten an entry and you want just a little bit more confirmation just before you commit to any kind of decision, this is what I would be looking for in the short term. OBV is in your favor. It's moving to the upside, and it's continuing its trend. Price overall continuing its trend, and echoing a lot of the price action that we were seeing back on the on Friday now. Getting some big red candles, but then a rebound shortly afterwards, and then a gap up the next day. So we might see some of that action again here soon. I'm going to go ahead and take away that wedge. No need for that anymore. Let's head down to the 15-minute chart. Nice green candle and consolidation here. And I wish I had some extra money. I wish that I had sold. I wish I had sold some of my calls and taken profits when we hit 540. I knew resistance was there, and I didn't take profits, and I don't know why. That was kind of dumb. A little lesson in taking profits and recognizing when things are overbought. You can still be bullish on a stock, even in the short term, and still sell your calls in order to get a better position on a better entry. After something has run for 100% gain in a week, it's understandable to be like, that is probably going to come down just a little bit. And to take a little bit of profit off the top, you can still hold on to a net long position and still day trade with like 10 or 20% of the rest of your position in order to scalp a little bit of money off the top. That's what a lot of day traders tend to do, and it's a risky way to play. And I guess if you do decide to play that way, pick your battles, and also keep in mind your heart rate. But uh, it's just something that you can do worth pointing out. Verde, I like your trading signals on this. This is a very nice chart. Let me go ahead and share this with everybody. Very nice. So this is a post by Verde, another one of our technical analysts here on Hell's trading floor. He's pointing out a head and shoulders pattern here. I would argue that the left shoulder is actually right here, but he's not incorrect. The shoulder and head, with this being the neckline at around $4.40. This is the point. The neckline is where you switch your position to a long position, or you make your entry. And keep in mind that an inverse head and shoulders, where the head is down and the shoulders are above, that's a bullish pattern. It's very similar to a cup and handle. Cup and handle would be more like if we just have one big U and then a little tail off of the end and then break to the upside again. This one is more like up, way down, way up, a little down, and then way up again. And it kind of echoes this. It's kind of like a giant, kind of like a wonky W. Go open up a trading book, or go look into inverse head and shoulders. You'll find them all over the market, but they tend to play out. Sorry, Verde, to cut you off. What'd you have there?
I just wanted to say the only thing that I don't think it bodes quite well with this is the MACD, which is curling a bit to the downside. You can see in the histogram is coming down. But yeah, we're just experimenting with a few growing things.
Yeah, but even if it consolidates here for the rest of the hour,
absolutely. You can the SMA clouds actually, or EMA. I have them on EMA now. Trend flat rather than downtrend, which is encouraging.
Yep.
Like, seems like a consolidation rather than a reversal straight away, in my opinion.
Yeah, I would agree. It does seem to be consolidation range bound between 450 and 425, that makes sense because this is max pain for market makers. They want to keep things expiring at 450. That max pain being the ideal point for market makers to make the most money and premium off of contracts that they sold for puts and calls. The idea that market makers are selling both puts and calls means that they want the largest number of both of those types of options to expire out the money so that they expire worthless, and they keep all the premium from the sales. If we break out of this pattern and market makers are not able to control the stock, which is indicative of the short exempts that I was pointing out here. Notice in the last 3 days we've had an exceptional amount of short exempt volume coming into the stock. This is something that only market makers can do. So if you see short exempt volume spiking like this, you're guaranteed it's a market maker that's doing it, because there's nobody else who's allowed to. And the fact that the short exempt ratio is consistently rising, the number of short exempts are rising rapidly, and short exempts are always selling. Short exempts are not counted when they are being covered. So short exempts, when you see this on FINRA's data, this is always selling. It's always selling. There's no like, oh, these short exempts might be covered or anything like, no, these are always selling. And if they are sold and they don't cover the position within 6 trading days, they fail to deliver, and that puts a great big bullseye on the market maker by FINRA and the SEC, assuming that they are willing and desired to enforce the rules. We would like to think that they do,
One
We
thing
hardly
I'm
see
really
any of those.
curious of.
Yep.
Sorry. One thing I'm really curious of, as soon as FINRA actually puts out the report for today, to see what actually caused the this price movement downwards. I'm pretty sure it's gonna be a hefty amount of short exempts, but that's just my gut feeling.
Yep, I'm willing to bet that that's correct. And it's interesting when you correlate failures to deliver with short exempts. There's always this 6 day gap between short exempts and big spikes in failures to deliver, which I would love for our analytics tool to start charting out. So something for me to talk to you guys about privately as we continue developing some of these tools. Joseph. I am not going to read that out loud, but that's pretty funny. How do you pick your wedge starting points? That's a good question. So, wedge starting points are based on supports and resistances, the same as you do with excuse me. Hope I didn't blow out anyone's eardrums. Picking the starting point is usually based on the highest high and the lowest low. That's traditionally what you do with drawing wedges like this. But mainly what you're looking for is a start of a trend line. So if you see a resistance here that is consistent or has hit multiple times, here's a good example. This is a solid point of resistance, and it is a point in time where a new trend was established. So the reason why I picked this one is because I see it touched this resistance before, and it broke down below and then broke above it again and then bounced off it. So I see this as a significant price area of resistance. So I just pick, in the case of a support candle, I pick this bottom wick of this candle where it touched that support, and then I draw along my lower wicks of these bottom candles and then continue the trend out from there. And on the top, I usually just pick the highest high, and then I draw along the tops of the wicks of those highs that follow it, and I continue the trend down that way. And then that's how you end up drawing a wedge. And wedges are mainly just to point out areas of consolidation. And what you do is, for wedges like this on a long-term chart, let's go to a long-term chart. So you kind of combine these a little bit. What you're looking for when you're drawing wedges is you're looking for patterns that are consistent and form ranges on stocks. So if you follow these wedges, you see that there's certain bottoms and tops to these, and it trades between them, and the ranges get narrower and narrower and narrower. It's hard to spot the beginning of a wedge because the trade it just hasn't developed. The chart hasn't fully drawn itself out yet. So on these ones, it's usually too late to trade on the high volatility because it's happening. It's too early in the chart to see that trend. But later on down the line, when you see that there's a clear downtrend here and that a wedge has been drawn, I need to clean some of this garbage up. Excuse me. Let me change the colors on some of these. Okay. So if I'm looking at this particular wedge, which I've drawn from the top of this candle down to the top of this candle, and also this one came close to it. It's pretty close enough. If this had not happened, if we were still like consolidating down here, then this is actually where my original wedge was. And then when I saw this breakout, then I knew that big things were happening, pun intended. So now I've extended this wedge out and I see that we've hit a resistance here. And if we establish a new trend based on this area of support, this is a horizontal support. But if I were to draw a line down here, then it would show that this is a falling wedge, which is a bullish wedge. So I'll go ahead and draw this. Kinda difficult to see it. Change the colors on this. You see it's a falling wedge. And this is just kind of helping me to spot the range in which BBIG is trading. So I recognize that BBIG could fall all the way back down here, but what I'm betting on, is that BBIG will make a recovery, and I'm betting on the top of this wedge to be challenged. I'm waiting on this resistance to be challenged. If I see that this resistance is challenged and broken, then I am expecting a much bigger move. And I did that by drawing out this megaphone pattern. The megaphone is following the trend of the tops of these wicks. Sorry that this had gotten a little bit messed up somehow. I don't know why it won't let me fix that. But anyway, so this wedge, I'm looking at I'm looking at the tops of these wicks, and this is a megaphone pattern, is what a lot of people call this. Essentially, it's looking for a broadening range that the stock can trade at. And the speculation here with this particular type of trade is that if it breaks from its downtrend and it continues to establish higher highs, then its upward potential is somewhere at the top where this resistance is. This is purely speculative trading, and like not at all guaranteed. This is how we draw these things to kind of like give ourselves an idea of what could happen. And I mean, you may as well call this like looking into a crystal ball or trying to like play the bones and you know, drink witch's brew. Like some people think that technical analysis is total garbage and makes no sense. And that's fine. I choose to use it. So, and you know, I don't do too bad. So maybe there's something to it, or maybe I'm just lucky. But I feel like there's something to these patterns, and they make me feel good. They confirm my biases. Shizvane says, toss a coin to your team and O Valley of Plenty. I love the Witcher reference. Thank you very much. I love the Witcher. I've been hooked on their soundtrack for a couple of days now.
Do not get that song stuck in my head again.
But it's so good. That game is awesome. I want to finish The Witcher Wild Hunt. I played it for a few months and I never finished it. Okay. Oh, all right. So Justin, I just saw your message. I see that you're having trouble joining the Patreon. I've added a link to the Discord, so you can go directly to the Discord server. Anybody that wants to join or is interested in joining, you can go to discord.gg/Hell's Trading Floor. It is a private Discord, and there is a paywall. It's only $3. Relax before you start calling me like some kind of a profit monger that's looking to steal everybody's money. Relax, okay? $3 a month is like, I'm not even charging you more than a Starbucks coffee. It's just to keep shills and scammers and spammers and bots out for the most part. If you want to donate more, there's options to do that, and we're super grateful for our supporters who do donate additional funds, but we want to keep this as open as possible. So for those, we ask that people attach a credit card to their name and Patreon account so that they can join the conversation. And that way, if somebody decides that they're really misbehaving, that we can kick them out very easily and we can keep them out. So that's the purpose behind it. So if me charging less than a coffee from McDonald's is such a big ask, then I'm really sorry for what you're going through in your financial struggles. But you probably shouldn't be playing in the stock market anyway if you're struggling for $3 a month. In any case, go ahead and join the Discord. Thank you, Mr. Boulay, for adding that link, Mr. Boulay, in the YouTube chat. You go ahead and click on that link. You can attach you can join the Discord. There are instructions on the front page along with the rules to show you around the Discord and help you get connected through Patreon. The main thing to do is make sure that your Discord and your Patreon account are verified with a phone number and a email address, and then once you've paid for your Patreon subscription, you simply go to patreon.com/member. Patreon.com/user/membership, or simply go to the Patreon page for Hell's Trading Floor. There is a button to connect to Discord, and you have to link your Patreon and your Discord accounts together. Patreon will have you log into your Discord, and then it'll automatically assign you a role based on what you purchased on Patreon, and you'll be able to access the rest of the Discord. For those who are just looking to get in and be a part of the conversation, the trader role is all you need. $3. You can come in, you can talk to everybody, you can chat with everyone, you can join in on these live streams and watch us in real time, and not deal with the YouTube delay. But I had a brain lesion and totally lost my train of thought staring at all of the Witcher memes that are flying by my my feed. Anyway, yeah, if you're just looking to be part of the conversation, be part of the community, and just get your fair share of DD, then the trader role is all you need. If you want to be a bigger supporter of the community, or you want to get access directly to the analyst team and watch them do their DD in real time, you can join the veteran role or above. And professionals get a very special thanks from me, and we'll work on some other perks for that later on. No obligation. Nobody has to choose these upper tiers. We're just super thankful for everybody, and so many people were like, we want to support more, and we're like, okay, so thank you, everybody. So I guess I'll take this time to shout out the very special members who are professionals who have at least contributed in some major way. Sick Echo, Cheese, Dark Yoda, Mega Sloth, Smiling Phil, and WRB. All of these are professional members who have been the biggest supporters of the community and have either provided a monetary donation or donated their own skills and talents to the team in some special way. Just wanted to say out loud here on stream, thank you so much for what you do. Thank you for supporting us. We really, really do appreciate the faith that you placed in us. Super, cannot express enough gratitude. Okay. Mass Fish, I'm excited to see how this 5th test of the short exempt algorithm works on BBIG. Hope it works out so we can't have that part of the Discord printing money. Yeah, I am excited to see how this algorithm plays out too. This will be the 5th time that we have tried the short exempt algorithm. Technically the 6th, because we played BBIG twice. We played BBIG for August, and we were right then too. But our first play with this one, this was my first play, I should say, because I had only tested the algorithm for the first time, was AMC on May 25th. My algorithm told me that it was going to, and it was before it was an algorithm, it was literally just me punching numbers into calc. But AMC May 25th, it said that within 30 days it would squeeze, and it squeezed June 2nd. It did the same thing for Sensionics June 3rd. I called that out on May 27th. There was BBIG, which I had been following and called out in August. That one took a little bit longer, but did end up squeezing at the end of August. SPRT, which was pointed out to me by another analyst of the Discord here, your boy J313. Really appreciate him bringing my attention to SPRT. He used my algorithm, which I had published on Reddit, and then said, "Hey, True Demon, do you know that your algorithm says that SPRT is ridiculously prime for a squeeze?" And I said, "No, I didn't. Thank you." And that only brought more attention to it from there. And SPRT went from $10 to $58, which is just insane. So those were all of the major squeezes that we played. AMC, Sensionics, BBIG. Oh, Prog. I can't forget Prog. It called out Progenity when it went from $1.50 to $6. It was a bit of a snail getting there, but it was most definitely a squeeze. And it did print. So sadly, it got smashed down. So I'm just going to bag hold for life because I think Progenity is an awesome company anyway. So squeeze or no squeeze, I'm holding it regardless. But Progenity did have its own squeeze as well, and that was also called out by the algorithm. So all in all, this will be the 6th time that the algorithm has been tested on something. And now it's no longer me just punching numbers into calc. Now it's actually like we got proper code and stuff. So hey, moving up in the world. Shout out, by the way, to Verde and Flabbergank for collaborating on that tool, building the code and the mathematic algorithms to refine this thing and make it available to the Discord. We have not released it just yet, but we are planning to do so very soon. We're just getting it nice and refined, take it out of its beta phase, and get ready to put that out in front of everybody so that we can all benefit from the magic of short exempt squeezes. Cool girls. True Demon is the smartest person my ears have ever heard. Thank you so much. I'm not that smart of a person, honestly. I never took an IQ test because I don't believe in them. But I think that I just draw charts and I know how to use a calculator pretty good. But I'm so glad I'm so flattered to hear that you think I'm a smart person. As long as people think I'm a smart person, I will feel good about myself. What does the algorithm say about Progenity right now? That's a good question. Haven't looked at it, but the algorithm probably doesn't say anything because the short exempts on Progenity are next to nothing. This is not a secret, by the way. The DD that we do on this, but I will go ahead and pull it up. Let me see if I can just go ahead and run a quick. We'll just run this really quickly. Got to do a quick command to check out Progenity. So I'm checking out Progenity for. I'm basically checking what the short exempt data is showing from from 2022 January 1st until today. Give the bot a second to propagate that. Thank you, Mr. Bot. Oh, it's actually pretty interesting. So we're using color coding to differentiate areas of massive deviation in short volume and short exempt volume. Right now, short volume on Progenity is really high, over 3.5 million on January 13th in particular was pretty severe. Short exempts are relative. These colors are based on relative changes. So overall, the short exempts are not super high, but the short exempt ratio does tell us that relative to the short volume, there's a significant amount of short exempts. Short exempts, by definition, are supposed to be exceptions. They're supposed to be unusual and only for situations in which they're absolutely necessary. Market makers have not been using them that way, and so far from what I've seen, anytime that the stock has a extremely high amount of short exempts rising rapidly with the short volume, and the short exempt ratio stays above 3%, then that's when you start paying attention. And then the signal that I look for to tell me that the stock is about to squeeze is when I look at the 5-day simple moving average. So if the short exempts are exceptionally high, the short exempt ratio is above 3% for more than 3 days in a row consecutively, and the 5-day simple moving average is in excess of 5% for 3 days in a row or more, then that is the final piece. The reason why is because if the 5-day simple moving average is gaining 5%, it means that the price is moving up at an average of 5% every day for several days in a row. That puts an immense amount of pressure on the shorts, and therefore they are incentivized, we'll say, to close their positions. So if a lot of shorts start doing that at the same time, then it's only going to cause it to rise ever faster. Now, if we compare that to, this is BBIG's data, we see the simple moving average is moving up very rapidly, and we can see the delta rate of change. This is the change of 4.5, now 9.8, 13.16, 19.03. These are huge delta changes. So today we're likely to see some decrease. We're going to see a little bit of pullback, and the delta rate will decrease a little bit, but the 5-day simple moving average will still be in excess of, I'll say about 3.2, just guesstimating based on where we are. And if this does end up playing out, then if we continue to stay on this uptrend and the simple moving average continues to move in an incline, while these short exempts are super, super high, then that just means that the market makers are not getting an opportunity to breathe. Every time they take these short exempts, they're taking the risk that if they can't keep the price down to cover those positions, then in 6 days they will fail to deliver, and then that's bad for their books. And if that happens too much, then they can be shut out of trading on that stock. I am very sad to say that I am just about out of time. So I will save the last 5 minutes for the Discord to drop in any other questions or anything else that they would like to ask me. I'm currently watching the film studio chat, guys. Let me know if there is anything you'd like me to cover really quickly before we close out the stream. I have 5 minutes before I have to start prepping for another meeting. Watch them move up. It'll be like magic. Yeah, of course. As soon as I walk away to go to a meeting, that's when we'll go ahead and run. Then everybody will be saying, True Demon, go to another meeting, go away.
I mean, it's trying to push hard out of that head and shoulders wannabe thing.
It really is. It's past the neckline.
Yeah, I think there's one last resistance at 466, that shooting star candle from like earlier in the day.
Yeah. Yeah, I agree. Well.
Let's go green.
Flabbergang says, those tables are effing ugly. Tell your programmers to get their shit together. Yeah. Programmers, need to do a better job with your UI. We'll refine the changes a little bit. Nothing
Hey,
like a little
David.
bit of self-deprecation just to make everybody feel good. Somebody had a question?
Yes, since you're about to disconnect, you mind taking a look at the SPY for the very last thing?
Sure, we'll take a look at the SPY. It's going to be ugly, isn't it?
Yes, sir.
Oh God! Oh no! The market is dying. It's hemorrhaging money. 453.92. Wow. When was the last time we saw this price? Honestly.
Probably when inflation was only 4% or 5%.
Wow. Yeah, we saw this back in December 20th. SPY's been consolidating in this 450, 480 range for a while now. That's pretty wild. The SPY really is a meme stock. It's time for it to crash. I've been saying for a while, like the SPY is. let's just. The SPY is a little overdue for a correction. Like let's just be honest. BBIG corrected after 3 days. The SPY I think is due for a correction after this. Man, just looking at the COVID crash and seeing how much it moved since then. Imagine if imagine taking leaps for $480 or something like that on the SPY as of last year. That person would have probably been a millionaire by now. And whoever sold those calls would be very, very, very upset. Oh man. Let's see who else.
The SPY did complete a gap fill from the, what was that, the 20th to the 21st?
Oh yeah, it sure did. Yep, it sure did. 20 to the 21st. Big gap, filled it, and kept going. Boof. That's rough. I haven't been playing the SPY in a while. I was doing pretty good doing vertical spreads on the SPY a few months ago. But I'm kind of glad that I haven't touched it in a while. I still haven't done put spreads. I should probably do some put spreads at some point. These ETFs are overdue some correction. Inflation requires BBIG to get to 10. Oh man, that's the saddest truth I've read all day. Take a look at Mara. And when is Hertz DD coming our way? So I'm hesitant to get out any Hertz DD. We don't. That one's a bit of a YOLO. We don't know how that one's developing yet. But we are looking at Hertz. Oh, wow. Yeah, Marathon Digital. This is a crypto play, if I remember correctly. It looks like it's formed a falling wedge. So this actually could be a good turnaround. Yep. Definitely a falling wedge. I'm going to ignore that top wick. I'm going to ignore that top wick. We're going to pretend that top wick isn't there, because this is clearly a falling wedge, and it's coming to its close now. So remember that falling wedges are typically a very bullish pattern, because they tend to break upward, and they tend to break upward in extreme ways. This is an example of another falling wedge. This was, well, actually, no, that's more of a bull channel. I'm trying to think of another example. I can't see any else on this chart. But looking at this particular chart, I see a very clear falling wedge pattern. So this one is currently at support. At the worst case scenario, it can break through here and fall out even further. But it's so oversold at this point. Mara hasn't been this low since July of last year. And I'm looking at these big candles, like there's huge institutional movement that's pushing this around. So I'd actually be looking, if I were to be playing Mara, to possibly make an entry right around 20, 24, maybe $23. Hertz. Can my new short exempt algo be called Trust Me Bro? No. But that's funny. That's not good marketing. I will take a look at Hertz. We are targeting this one for a short squeeze, but it's a bit of it's a bit of a scary gamble. So I hesitate to do too much on this until we're testing the algorithm on this one too. And the reason why is because Hertz had a huge print on some deep out the money calls with a lot of cash against them, with a lot of cash bet in favor of Hertz going above $35 by mid-February. It was a huge bet, and it got a lot of our attention. Occam's Phaser originally picked out some DD on this one. It got hit in November, and it's been in this consolidation wedge for quite a while now. Pretty much range bound between $28 and $19.50 or $18. Remember, the consolidation tends to be bullish. It's just, I guess, just because the market likes to go up more times than it goes down. But looking at the OBV, notice that the price is tracking with the OBV. And at the moment, the OBV in this case is just, it's not really showing any particular oscillation or direction. However, we do see that
it's worth.
What's up?
Sorry to interrupt. It's worth noting that the gap in November is from a relisting. So they filed for bankruptcy, and then they had to change from, I think, New York Stock Exchange onto NASDAQ or something like this. So that's basically why you have that gap fill there.
Got you. Okay, so this gap fill right here I'm pointing at in November. I think we lost him.
Yeah. That's the one.
Okay. Thanks.
Yeah, if I remember correctly, it was a relisting on NASDAQ.
Really?
They've changed basically like the parent company or something like this. Therefore, they had to do a relisting.
Gotcha. Okay. Cool. Thank you for that information. I did not realize that. So OBV on the daily chart, it does show this interesting plateau here, which, despite the price selling off here, wasn't really making much of an impact because the volume was so low. And now we've entered into another high volatility, high volume period, and it's swinging around quite a bit, though still range bound. We're basically just looking at short exempts and the fact that the short exempts were ridiculously high. But right now we're waiting for signals and signs that the simple moving average is going to push to the upside and put some pressure on shorts. There's a lot of short interest against this particular stock, and we saw an unusual whales print for $35 calls, which are obviously very far out the money, and they're expiring in mid-February. So it's a really big bet that we could not help but notice. If those were to print based on the trading price of HTZ at the time, then if it met or exceeded that price by expiration, it would basically amount to we would be talking about like a 30 to 40% gain just on the underlying security. The calls would be worth much more, especially if they were to go in the money sooner rather than later. The sooner the better. So we're just watching this one right now. Some of us do have a position in HTZ, but we're not quite. This is kind of like a really small, like, we'll throw a few dollars at this one and just see what happens. So feel free to do your own due diligence on this one. It's very interesting. But that unusual whales print was definitely a YOLO bet. But it was a YOLO bet by somebody with a lot of money. And if they're wrong, and they don't, like, they can be wrong by a cent and lose all of it. So somebody has some serious confidence if they think that this thing is going to go up by $13.25 in less than 30 days. That is all the time that I have, though. Thank you, everybody, for watching the stream, for jumping in with us, having this conversation, and throwing all of your tickers at me. I really enjoy covering these and chatting back and forth about all this stuff. And I'm sorry that I wasn't able to get to everybody with all of your requests, but consider joining the Discord, discord.gg/Hell's Trading Floor. Our sign up is through Patreon, which you can find at patreon.com/the Devil's Broker. And if you have any trouble joining the Discord, if you open it up and just see like only the rules page and nothing else, then just call a manager. Just look for a manager in the members list and message them for some assistance. We'll be happy to help you get signed up. That's all the time that I have for today. Thank you guys so much for joining, and I'll see you next time.